Welcome students. This is my video lecture for May 2017 attempt case laws, and this lecture is only for excise case laws. In this lecture there are approximately 50 case laws. As far as videos is concerned, it is available on home page, and as far as material is concerned, it is available in the download section. As far as material is concerned, you have two choices. One, a detailed material. Alternatively, a summary. Have a look at both the materials and decide for yourself which one is good for you. Having said that, let us start. The first case law is Osner Chemical 2012 Supreme Court. We have always said, what do you mean by manufacture? As per common parlance, manufacture is change, but every change is not manufacture. Something more is required, what is called as transformation, and transformation such that input and capital goods, inputs and output decide in terms of name, characteristics and use. So to decide whether process amounts to manufacture, we apply three tests: name test, character test and use test. Among these three tests, use test is to be given top prominence. We know that. Now here the assessee, Osner Chemicals, what process they are doing? To the base bitumen, they are adding polymers and additives. At a very high temperature, to the base bitumen, polymer and additives are added. Because of that, the quality of bitumen increases substantially. There is a tremendous value addition. What was the input? Bitumen, but because of adding polymers and because of adding additives at a very high temperature, what takes place is modified bitumen. No doubt there is a tremendous value addition, but end use does not change. The base bitumen or modified bitumen, both of them are used for the same purpose. Pure value addition does not amount to manufacture. If use has not changed, process certainly does not amount to manufacture. That is the case law, Osner Chemicals 2012 Supreme Court. It was held there was no change in the characteristics or identity of the bitumen, and only its grade or quality was improved. Manufacture could be said to have taken place only when there was a transformation of raw material into new and different articles having different identity, characteristics and use. I think rest you can read it for yourself, because we are already experts of this. The conclusion is only value addition is not sufficient to decide the process amounting to manufacture. For deciding process amounting to manufacture, transformation has to take place, and transformation such that use of input and final product has changed completely. Osner Chemicals 2012 Supreme Court. The first case law, Fitrite Packers 2015 Supreme Court. The question is, does printing on jumbo rolls of GI paper as per design and specification of customer with logo and name of product in colorful form amounts to manufacture? To explain in that case law to you, a small slide that which I have prepared. The case law is basically Fitrite Packers 2015 Supreme Court. This is their factory. What they are doing is that from the market they are purchasing jumbo roll of GI paper. Then on that paper printing activity is done. Process of printing is done. Process of printing of logo of the buyer, name of the product in colorful form. Design and specification is provided by the customer. So basically this is GI paper which is normally used as packing material. But now if it is used by a specific client for specific purpose, he has hired us. We are going to do a process of printing. What we are going to print on this GI paper is logo of the buyer and name of the product. For example, just as a demonstrative example, this example I have given, he has done a purchase of jumbo rolls of GI paper. On that process of printing has been done. Now it has become a specific product. Now this cannot be used for any other packing. Generally GI paper can be used for any packing, but moment logo and name of the product is printed, now only that buyer can use it as packing material. Whether the process of printing amounts to manufacture? That is the question. Here I am on page number 1 of my material. Facts. The assessee purchased duty paid GI paper from the market and carried out printing on it according to design and specifications of the customer. The printing was done on jumbo roll of GIP twist wrappers. On the paper, logo and name of the product was printed in colorful form and same was delivered to customer in jumbo rolls without slitting. The customer intended to use this paper as wrapping packing paper for packing of their goods. The question is whether process of printing amounts to manufacture. The revenue department said process amounts to manufacture. Assessee said process does not amount to manufacture. For discussing this, here if you remember in the classroom condition we have discussed one American case law. Case law said manufacture means change, but every change is not manufacture. There is something more required. It is called as transformation. Transformation such that input and final product differ in terms of name, characteristics and use. So whether or not process amounts to manufacture, to decide that there are 3 criteria. Input and final product should differ in terms of name, characteristics and use. So there are 3 acid tests to decide whether or not process amounts to manufacture. Are all 3 tests equally important? No. We have learnt in one of the case laws that use test is to be given top importance. So that was the discussion to decide whether or not the process amounts to manufacture. Here court said process amounts to manufacture. It was held in this case law that this process amounts to manufacture. The reason is very simple. What was the end use of input? It could have been used as packing material for any product. What is the end use of final product? Now it can be used only as a packing material of a specific product by specific manufacturer. Here because of the process use has changed completely, so the process amounts to manufacture. Let us read together what the judge said in this case law. It was held that process amounts to manufacture. The process of above particular kind of printing results into new product. That is a paper of distinct character and use of its own which it did not bear earlier. There is a transformation. A new and different article emerged having distinct character and use, whereas the blank paper could have been used as wrapper for any kind of product. After printing of logo and name of the specific product thereon, its end use got confined to only a particular and specific product of a particular company. Logic very simple. The process had changed the use of the product. So process amounts to manufacture. Please read Fitright Packers 2015 Supreme Court. The next case law, Grasim Industries Limited 2011 Supreme Court, has already come once in examination. It has come in November 13 attempt. What we know, first let us remember that on the waste generated, suppose this is my factory and this is my manufacturing process. I bring some inputs and I convert it into final product, and in that process some waste is generated. On the waste generated in the factory, excise duty will become payable subject to fulfillment of 4 conditions. Independently, waste should be movable. Independently, waste should be marketable. Independently, waste should be excisable goods. And waste should be result of manufacturing process. Here, in this case law, what has happened is like this. The manufacturer has some machines. The machines are worn out. They have become old. So, you need to redo the machine. So, he has done the process of repair and maintenance of the machines. In that process, some inputs were used, and in that process, some waste is generated. Please understand, waste here is not generated in the manufacturing process. The waste here was generated while repairing the machines. If that is true, then can such waste be called as result of manufacturing process? Answer is no, and no excise duty is payable. The crux point I will repeat once again. Waste, on the waste generated in the factory, excise duty is payable only if waste is result of manufacturing process. if waste was generated while repairing the machines, on such waste generated, no excise duty is payable. That is the case law, Grasim Industries Limited, 2011 Supreme Court. The next case law is Beldi Pharmaceuticals 2011 Supreme Court, and again this also has come in one of the examinations in May 2014 attempt. The question is, when do you say that goods are marketable? You have excise duty liability if you have produced or manufacture excisable goods in India. So first it has to be goods, and to make it goods it has to be movable and marketable. But when do you say that goods are marketable? What is the test to decide the marketability? And my answer is that there are buyers for the goods, there are sellers for the goods, there are traders for the goods. The goods are normally bought and sold, capable as it is. Goods are capable of being presented as it is. Goods are capable of being sold, and at the marketplace, goods are recognized as goods. If all these conditions are satisfied, then certainly those articles will be called as marketable and they will become goods. The question is physician samples. Pharmaceutical industry, as you know, distribute lot of samples to the physicians. The question is, the samples which have been distributed to the physicians, can they be called as marketable? No doubt that they are not sold, but to prove marketability, selling is not required. Whether physician samples, whether they are marketable, the answer is very simple. The samples presented as it is, are they capable of being sold? And the answer is yes. Another argument of the assessee was, under Drugs and Cosmetics Act 1940, if it is free samples and on those samples if it is written that they are free samples, then they are not to be sold. The condition under some other act, whether it will create restriction on marketability for the purpose of Central Excise Act, and the answer is no. The Drug and Cosmetics Act and Central Excise Act work under different horizons. Condition under Drugs and Cosmetics Act cannot make the goods non-marketable for the purpose of excise. Conclusion, physician samples which are otherwise capable of being sold as it is are marketable. That is the decision, Melody Pharmaceuticals Limited, 2011 Supreme Court. Next case law, Usha Rectifier Corporation India Limited, 2011 Supreme Court. The question is very simple. Assessee has purchased duty paid parts. Assessee has purchased duty paid parts. For example, part A, part B, part C and part D. He assembled them together and has manufactured capital goods. Whether process amounts to manufacture? Answer is absolutely yes, because what is brought was part A, part B, part C, part D, and when it is assembled, what has happened is a machine. So transformation is there, certainly process amounts to manufacture, and assessee should have excise duty liability. But assessee had some arguments. These machines were manufactured only for testing the final product. So after the testing was completed, those machines were dismantled. Whether that will save the assessee from excise duty liability? And the answer is no. If you remember, in the light of charging section 3, if you have done production or manufacture of excisable goods in India, you have excise duty liability, and moment manufacturing is complete, duty is levied. Subsequent to that, what you have done with the goods, that will not change the duty liability. For example, worst scenario, we used to discuss one example in the classroom. I am that kind of a person, I manufacture excisable goods, then I remove it from my factory, take it to isolated place and then I destroy it. Suppose I am doing that kind of activity, whether still I will have to pay excise duty? Answer is yes, because if you have manufactured the goods, subsequently what you do with those goods does not change your excise duty liability. Here, if assessee has assembled capital goods in the factory, process amounts to manufacture, he has manufactured capital goods, he has excise duty liability. The other argument of the assessee was the capital goods were never taken out from the factory. But if you remember explanation to rule 5, explanation to rule 5 says moment you start using these capital goods in your process, it amounts to deem manufacture. It amounts to deem removal. So that argument of the assess is also not sustainable. Just because you have not removed the capital goods from factory, that does not change anything, because moment those machines you start using it in your factory, that will amount to deemed removal because of the explanation to rule 5. So the answer is, the question is whether assembling of testing equipments for testing the final product in the factory amounts to manufacture, and the answer is yes. Usha Rectifiers Corporation India Limited 2011 Supreme Court, it was held that duty was payable on such testing equipments used for testing the final product. Next case law is Nicholas Piramal India Limited 2010 Supreme Court. This we have always discussed in the classroom also. The point is, short shelf life cannot be equated with no shelf life. Irrespective of short shelf life, by ways and means, if goods can be marketed and if department can prove that goods are marketed, then decision will come in the favor of department. Important English I will talk once again. Short shelf life cannot be equated with no shelf life. Here the goods in discussion have 2 to 3 days shelf life. But 2 to 3 days shelf life is sufficient to market the goods. Department was able to prove that. So the court gave decision that it is held marketable. It was held. Short shelf life could not be equated with no shelf life and would not mean that it could not be marketed. A shelf life of 2 to 3 days was sufficient long enough for product to be commercially marketable. Shelf life of a product would not be relevant factor to test the marketability of the product unless it is shown that the product had absolutely no shelf life. The shelf life product was such that it was not capable of being bought and sold during the shelf life. If shelf life is so short that within that life goods cannot be bought and sold, then that is different issue. But 2 to 3 days of shelf life is sufficient to market the goods. Nicholas Piramal India Limited 2010 Supreme Court. Next decision, Solid and Correct Engineering 2010 Supreme Court. This decision in fact we have already studied in our book also. For example, this is the Mother Earth. You have been retained to construct a plant, maybe an AC plant for example. We purchase plant A, we purchase part A duty paid, we purchase part B duty paid, we purchase part C duty paid. It was assembled together. We purchased part D. It was assembled together. A new machine has been brought. Though huge, it is capable of being taken to alternative place as it is. The point is, yes, this machine is quite huge in size, but still without dismantling it, it is capable of being taken to alternative place. But anyway, taking it to alternative place was not the idea, because client wanted to operate this machine and because he wanted that it should operate wobble free. So what they have done, they have created a structure, and by putting nuts and bolts and by putting grouting material, they have fastened it to earth. But here at one point of time, excisable goods in movable condition were bought. Because client wants to operate it wobble free, different is the issue that by putting nuts and bolt, it was fastened to the earth. But when first time it was born, it was already movable. So this amounts to manufacture of excisable goods and excise duty liability should be there. That is the decision, Solid and Correct Engineering 2010 Supreme Court. It was held that the plant in question were not immovable property, so as to immune from the levy of excise duty. Consequently, duty would be levied on them. That is the case law, Solid and Correct Engineering 2010 Supreme Court. Next case law is Tarpaulin International Limited 2010 Supreme Court. This case law has already come in November 2011 attempt, a very simple case law. What the person was doing is like this. he was buying tarpaulin sheets. A large tarpaulin sheet he will buy. He will cut it to convenient size. For example, he will cut it to a small size. Now, this will be used in rainy season as waterproofing material. For example, you may have seen juggi jhopdis, small houses. In the rainy season, they will be covered with the blue kind of cloth, this waterproof cloth, that is this tarpaulin material. Now, if you want to use it conveniently, then what you have to do? First you buy a large tarpaulin sheet, then cut it to convenient size, then punch the holes. Punch the holes. Now because of the holes, if you put ropes inside it, it will cut itself. So you put eyelets. Iron eyelets you put here so that they don't tear. Now they have become very convenient to use. You can put ropes inside and tie it to whatever you want. So what is the process manufacturer is doing? He is buying large sheets of tarpaulin material, cutting it to convenient size, punching the holes, putting the eyelets, and then he is selling to the users. Whether the process of cutting tarpaulin sheet to convenient size, punching of the holes and putting eyelets, whether the process amounts to manufacture. And it was held in Tarpaulin International that process does not amount to manufacture. How do you decide a manufacture? Name test, character test and use test. And the most prominent test among them is use test. Irrespective of having done this process, still before cutting and after cutting, the use has not changed. Here, even if the processes were not done, still the use of that final product has not changed. It was a tarpaulin material before, it's a tarpaulin material now. The use for which it will be put has also not changed. Process does not amount to manufacture. That is the case law, Tarpaulin International 2010 Supreme Court.
I have no value addition to make. It's a very, very simple case law. Might be all case laws would have been so simple, then job was easy for us. But for an exception, a very, very simple case law, we study definitions, and in the definitions, many times there is a word means, and sometimes that the word means is followed by includes. Whether the word include reduces the scope of the means portion or whether it increases the scope of means portion. Ramala Sahakari Chini Mills Limited 2016 Supreme Court, that the word include in a statutory definition is generally used to enlarge the meaning of the preceding words, and it is by way of extension and not with restriction. So includes portion, the word includes increases the scope of the definition and does not restrict it. A very simple case law. Please read it to yourself. Nothing more value addition from my side.
Next case law is Sony Music Entertainment 2010 Supreme Court. Ekdam very simple case law. I have nothing much to value add here. Almost I am going to read it as it is. But what SSE is doing? He is importing compact disc. He is preparing inlay cards, and he is putting it into jewel box. He is packing it and it's selling it. Whether the process amounts to manufacture? Of course no. None of the activity that SSE undertook involved any process on the compact disc that were imported. Held, activities carried out by the SSE did not amount to manufacture since the compact disc had been complete and finished when imported by the SSE. No value addition from me. Sony Music Entertainment 2010 Bombay. Next case law, according to me, it is very important case law. Maybe in different perspective, but really we have to understand this case law thoroughly. It is Barlampur Chini Mills Limited 2013 Allahabad. This has already come once in the examination, but still let us understand this once again. First, let me remind you something. Suppose I am doing this process. I am bringing my inputs and which I convert it into final product, and in that process some waste is generated. Now, whenever I sell my final product, on selling price, excise duty is payable. when I sell West, on West selling also on my selling price, excise duty will be payable. This is subject to condition that independently West is movable, West is marketable, West is excisable goods, and West is result of manufacturing process. If all these conditions are satisfied, then on West selling price also I will have excise duty liability. But now I change my example. Suppose as per CETA, for example, now I change my example. As per CETA, the final product name is written in the CETA and it is subjected to duty, for example 12%, and West is also excisable. In CETA, West name also exists and it is nil. Now, what is my liability? If you remember, this will amount to manufacture of one dutiable goods and one exempt goods, and rule 6.3 of Sinovat credit rule will become applicable. If I am selecting for 6.3.1 option, then what will be my liability? Inputs, I convert it into final product. In that process, final product is generated, and in that process, West is also generated, and my West is nil rate. Then this will become a perfect case for 6.3.1. On final product, whenever I sell it on my selling price, I will have to pay excise duty, and whenever I sell West on its selling price, 6% will become payable, because this will amount to manufacture of one non-exempt goods and one exempt goods. So conclusion is very simple. If West is result of manufacturing process and if West is dutiable, then on selling price of West, excise duty will become payable, and if West is result of manufacturing process and West is nil rate, then on value of West, 6% will become payable. But both these things are applicable only if West is result of manufacturing process. Here, there is a little element of surprise. Here, what is the West? It is called as bagasse. In a sugarcane factory, when sugar is crushed, so that sugar is crushed into sugar juice and then it starts with the manufacturing process of sugar. But then the first process, when sugar cane is crushed, bagasse is generated. Bagasse is residue or a waste of the sugar cane which is left behind when sugar cane is crushed. The question is whether this bagasse is result of manufacturing process, and you have to accept it as it is. Here the court has given decision that bagasse is not result of manufacturing process. It was held, High Court's decision, though bagasse is an agricultural waste of sugarcane, it is marketable product. However, duty cannot be imposed thereon simply by virtue of explanation added under section 2D of Central Excise Act 1944, as it does not involve any manufacturing activity. The High Court quashed the CBC circular dated so and so. Two questions involved. Whether bagasse is marketable? Answer is yes. No doubt that bagasse is bought and sold. But still, excise duty will be payable only if bagasse is result of manufacture. Here court has said, which is a personal observation, take it as it is. As per the High Court, bagasse is not result of manufacture. And if it is not result of manufacture, then no excise duty is payable. Whether or not it is marketable, that does not change the situation. Please understand, you have excise duty liability if you have produced or manufactured excisable goods in India. If bagasse is not result of manufacture, there is no excise duty liability. That is the decision in Barlampur Chini Mills 2013, Allahabad. But now one question, one point we have to remember and understand. Please understand, I'll put it little differently now. I bring sugarcane, I bring my inputs, I convert it into final product, maybe sugar, and when I sell it on selling price, I will always pay excise duty. But in that process, not as a result of manufacture, some bagasse is left over, which I call it as waste, and I am selling that bagasse also. But now, as you know, if it is removal of non-excisable goods from the factory for the purpose of Rule 6.3 of Sin-VAT credit rule, it will get the same treatment of exempt goods. So, clearance of non-excisable goods from the factory will be given same treatment as exempt goods. So, now under the amended law, even on the selling price of bagasse, 6% will become payable. I have two questions. One, is bagasse result of manufacturing process? Because courts have given decision, I still say bagasse is not result of manufacturing process. My second question, whenever I sell bagasse, on the selling price, is some liability arising? And my answer is yes, and the logic is this will amount to clearance of non-excisable goods from the factory, and for the purpose of Rule 6.3 of Sin-VAT credit rule, which was amended latest, they have said that non-excisable goods will get same treatment like exempt goods. So conclusion, on selling price of bagasse, 6% will be still payable. That is the fact which makes this case law very, very interesting. Have a look at Barlampur Chini Mills Limited, 2013, Allahabad. Next case law is CN Laboratories 2013 Supreme Court. This has already come in May 2015 attempt. The question is whether Moisturex is toilet preparation or whether it's a medicine. Department was saying that this is a toilet preparation. Department has two arguments for that. One argument that it is available at general stores also without prescription of a doctor. What is medicine? Normally medicine is what is available by doctor's prescription, and it is only available in medical and pharmacy stores, whereas Moisturex, this is a cream which is also available in medical and pharmacy stores but also available in general stores, and it is available even without prescription of a doctor. That is the first argument of the department. And second argument of the department, that it is not used for cure, it is used for care. If it is care, it is toilet preparation, and if it is cure, it is medicine. Whereas SSC was saying कि even if it is true that it is available in general stores also, the one who purchases it, he does not buy it because he cares for his skin. If that person has problem of dry skin, then he will purchase it. It has lot of pharmaceutical values, and it is not purchased, it is not used for care, but it is used for cure. The whole debate is whether it is care or it is cure. And court gave decisions after having common parlance and after having the way this particular product is used. Court observed that this cream has a lot of pharmaceutical contents and it is only used by the people who have dry skin. So it is not a care product, it's a cure product. It should be classified as medicine and not toilet preparation. It was held owing to pharmaceutical constituents present in the cream, Moisturex, and its use for cure for certain skin diseases, the same would be classified as medicament. There are two reasons in the support of this decision. First, it has lot of pharmaceutical ingredients, it is for therapeutic use, and it is only used for cure, it is not used for care. So it is medicine and not toilet preparation. That is CN Laboratories 2013 Supreme Court. Next case law is about classification issues, and when it is classification issues, normally it is absolutely fact-based case laws. So this is absolutely a fact-based case law. I am talking about Minwool Rock Fibers Limited 2012 Supreme Court. The question is whether slag wool and rock wool, whether it should be classified under the head 68.03.00 or whether it should be classified under 68.07.10. Then for slag wool and rock wool, in CETA there are two entries.
One is 68.03.00 where it is written slag wool and rock wool. But subsequently the revenue department has introduced one more entry where the number of entry is 68.07.10 and in that entry it is written rock wool slag wool manufactured by the use of more than 25% by weight of blast furnace. Here, as far as while manufacturing the product we are talking about, whether or not 25% of blast furnace is used, that is not in dispute. That is accepted by the department as well as by the assessee, that while manufacturing these products, certainly it consists of 25% of blast furnace. But now, when there are two entries available, what should be the correct classification of the goods? And courts has given two arguments. One argument court has given that when there is a dispute, the beneficial classification to the assessee should be accepted. Please understand, if it is 68.03.00, it is 18%, and if it is 68.07.10, it is 8%. So the first argument given by the court is when there are more than two classifications possible, the one which is beneficial to the assessee should be preferred. Also, the court has said when heading specifying goods according to its composition is available, then it should be preferred over a specific heading. The point is, when the heading which is specifying goods according to composition, now here rock wool, slag wool is used by weight of blast furnace. When the court is saying when the heading which is specifying goods according to composition is available, then it should be preferred over the specific entry. So the decision is correct classification is 68.07.10 and applicable rate of duty is 8%. That is Minwool Rock Fibers Limited 2012 Supreme Court.
Next case law is Wokhard Life Science 2012 Supreme Court. The question is antiseptic cleaning solutions, whether they are detergents or whether they are medicaments. First, let us understand what is the end use of these antiseptic cleaning solutions. This particular antiseptic cleaning solution is used by the surgeons before they perform surgery to wash their hands, to disinfect their hands before surgery and after surgery. Also, this antiseptic cleaning solution is used on a patient. पेशेंट के जो पार्ट के ऊपर सर्जरी करना है उसको डिसइंफेक्ट करने के लिए ये एंटीसेप्टिक क्लीनिंग सॉल्यूशन यूज करता है. Now please tell me, just because it has so cleaning is required, so some detergent contents are there. Just because there are some detergent contents, whether such a cream, such a solution which is exclusively used only by surgeons for disinfecting their hands before and after surgery, or for disinfecting body parts of the patient on whom surgery is to be performed, whether it is medicament or whether it's a detergent. And the obvious answer, surgical cleaning solution is a medicament and not a detergent, even if it is used as detergent as well. Wokhard Life Science 2012 Supreme Court. Next case law is Connaught Plaza Restaurant Private Limited 2012 Supreme Court. Very interesting product for you. Whether soft serve which is served at McDonald's, whether it is ice cream or other dairy produce. Assessee was claiming that it is other dairy produce and department was saying that it is an ice cream. And assessee in support of his argument was saying that as per Prevention of Food Act 1955, to call it an ice cream, minimum 10% fat should be there, milk fat should be there in the ice cream. The assessee is saying to call it an ice cream as per Food Adulteration Act, minimum it should have milk fat of 10%, whereas in soft serve there is only 5% milk fat. That is first argument. Second argument, assessee is saying that when we market it, we are not marketing it as ice cream. The nomenclature given by us is soft serve. That is not ice cream. That is our nomenclature given. What nomenclature we give? We don't market it as ice cream, we market it as soft serve. But here courts depended on common parlance. You know, when act and rules are silent on the issue, court shifts to common parlance. Court enters the shoes of a common man and tries to decide what common man will call this product as. And based on common parlance theory, in this decision, court has given decision that soft serve is ice cream and not other dairy products. This last para I want to read it for you. Apex Court observed that none of the terms of heading 0.04, heading 21.05 and heading 2108.91 had been defined and no technical or scientific meaning had been given in the chapter notes. Further, soft serve was also not defined in any of the said chapters. Supreme Court, after considering various judgments, concluded that in the absence of statutory definition or technical description, interpretation ought to be in accordance with common parlance principles and not according to scientific and technical meaning. And it was held that soft serve is ice cream. Please understand, if clear specific description of soft serve was available in Central Excise Tariff Act or in Central Excise rules, Supreme Court would have preferred that over common parlance. But when act and rules are silent on the issue, the decision will be based on common parlance theory, and I am sure you and me, by common parlance also, we know that soft serve is an ice cream and not other dairy product. That is the decision, Connaught Plaza Restaurants Private Limited, 2012 Supreme Court.
Tata Chemicals Limited 2016 Supreme Court take it as completely fact-based case law. The question is amount charged by the manufacturer to the buyer towards reusable container, whether it should be reduced from the value for excise duty purpose. And answer is of course yes, but it is subject to condition that either the invoice issued or the contract entered with the buyer clearly shows these terms and conditions, either in the invoice issued to the buyer or in a contract entered into with the buyer. It should be clearly mentioned that what is the value of reusable containers, and if it is returned, what amount is returnable. The point is very simple. The court says if the contract issued to the buyer or the invoice issued to the buyer gives clearly the terms and conditions about return of reusable containers, then yes, amount charged separately towards reusable container should be reduced from the value. But if the invoice or the contract is silent, there is ambiguity, or the exact treatment of reusable containers is not mentioned properly, then this reduction will not be allowed. Here in Tata Chemical Limited 2016, Supreme Court held that in the absence of factual foundation in support of fact that such arrangement existed between the parties, the value of gunny bags returned by the buyer could not be excluded from the assessable value. That is the very fact-based case law. Please take it as it is. Tata Chemicals Limited 2016.
Next case law, Super Syntex India Limited 2014 Supreme Court. As you can see, it has already come in November 2014 attempt. And what is the case law about? For example, SSE sells goods like this. When he sells the goods, for example, selling price 100 rupees. On that, for example, VAT is charged 10 rupees, 110. This is the way goods are invoiced to his customer. He recovers 110 rupees from the customer, and when it comes to paying VAT liability to state government, he has been given remission of 75%. Out of this 10 rupees, only 2 rupees 50 paisa he pays to state government. Normally, these are the kind of the schemes which are given if you set up your units in backward area. For example, SSE has set up unit in backward area, and that is why out of the total VAT collected by him, 75% of the VAT is remitted. He needs to pay only 25% VAT to the state government. If that is true, then what is value for excise duty purpose? Whether from 110 rupees, reduction of 10 rupees will be allowed or reduction of rupees 2.50 will be allowed. When we स्टडीड डेफिनेशन ऑफ ट्रांजैक्शन वैल्यू, उसके एक्सक्लूड्स पोर्शन में लिखा था टैक्सेस, ड्यूटीज एंड सेस विच हैज बीन चार्ज by the manufacturer to the customer actually collected and actually paid should be allowed as reduction. वहां पे word use था actually paid या actually payable. So for getting the reduction, you will get reduction of actual VAT that you have paid to the state government. So reduction should be available only of rupees 2.50 and not rupees 10. Transaction value should be 107.50. मतलब ऐसे होगा 110 minus what is actual VAT paid, 2 rupees 50 paisa. Reduction will not be allowed of what VAT you have charged to your customer. Reduction will be of what VAT you have actually paid to the state government. SSC has paid actually rupees 2.50, so reduction of 2.50 will be available, and assessable value for the calculation of excise duty liability will be 107.50. That is the case law. Reference is that actually paid will be allowed as reduction. That is Super Syntax India Limited 2014 Supreme Court. Next case law, Tata Motors Limited 2012 Mumbai, is most important and expected case law. Along with that, followed by this is one case law of TVS Motors. Both of them are very important and expected case laws. Before we study this case law, let us try to remember something. What about warranty and after sale service? Is it includable in the transaction value? Is it includable for value for excise duty purpose? And my answer is yes. Warranty and after sale service. Amount charged by the manufacturer to the buyer in the form of towards warranty or after sale service is to be added in the value for excise duty purpose. There is no doubt about it. In fact, in definition of transaction value, also in the includes portion, they have already written that warranty and after sale service is to be included. So this is to be included, but then this is subject to certain conditions. What are the conditions? To be added in the value for excise duty purpose. First of all, it should be sold by the manufacturer. Secondly, it should be sold along with goods. Then it should be added in the value for excise duty purpose. For example, Tata Motors has sold a car, selling price 6 lakh rupees. Warranty, this is the normal warranty for which they have charged 20,000 rupees, and extended warranty for which they have charged 30,000 rupees. For example, warranty was compulsory in nature, but extended warranty was optional in nature. If you have taken extended warranty, normally with the warranty your car is covered for 2 years, and when you have purchased extended warranty you get another 3 years, you get warranty for 5 years. Now a particular customer prefers to buy extended warranty and he has purchased it along with the sale of the car. Warranty, extended warranty, whether compulsory or optional in nature, if it is sold by the manufacturer and if it is sold along with the goods, then it is always by the reason of or in connection with the sale of the goods and always to be included in the value for excise duty purpose. Here value for excise duty purpose will be 6,50,000. That means my conclusion here, warranty, whether warranty after sale service, whether compulsory or optional, that is irrelevant to decide. But if warranty is sold by the manufacturer, if it is sold by the manufacturer along with the goods, and for that price has been charged over and above price paid or payable for the goods, it is always to be included in the value for excise duty purpose. But then Tata Motors, the facts of the case law are little different. Tata Motors, for example, sell goods to dealers For example, they have sold goods to the dealer, the car to the dealer for 6 lakh rupees. And Tata Motors is also interested in maintaining one price policy. So, if you are our dealers, for example, you are supposed to sell car only for 6,30,000 rupees. But you have one obligation. If you are our dealer, whenever car is received by you, you have to perform pre-delivery inspection. Plus, it is your obligation to give 3 after sale service free. Now, the question is whether cost incurred by the dealer towards pre-delivery inspection and towards 3 after sale service, whether it should be included in the value for excise duty purpose. CBC has issued one circular, that was circular number 643/34 of 2002, dated 1st July 2002. In that circular, CBC has said that cost incurred by the dealer towards pre-delivery inspection and towards 3 after sale service should be included in the value for excise duty purpose. But SSE is offended by this. SSE says amount charged towards warranty and amount charged towards pre-delivery inspection and amount charged towards 3 after sale service should be added in the value for excise duty purpose only if that amount has ever reached the manufacturer. यहाँ पे there are clear 2 transactions. In the first transaction, Tata Motors has sold goods, sold car to the dealer. This is the first transaction, and from the manufacturer's point of view, this is the only transaction. Let us understand whether conditions of 41A are fulfilled. Whether Tata Motors has sold the car, answer is yes. Whether price is the sole consideration, answer is yes. Whether Tata Motor and dealer are unrelated party, answer is yes. Just because you are my dealer, that does not create any relationship. And the last thing was delivery at factory gate. Let us assume that delivery was at factory gate. The SSE is saying whether assessment of this transaction is possible under section 41A or reference to rules is required, and the answer is assessment of this transaction is possible under section 41A because Tata Motors has sold the car to the dealers where the price 6 lakh rupees is the sole consideration. Manufacturer and buyer are not related person and delivery was at factory gate. The sale for manufacturer is complete here. Pre-delivery, 3 after sale service were out of margin earned by the dealer and that amount has never reached the manufacturer. I'll repeat my one point once again. Amount charged towards warranty and after sale service should be added in the value for excise duty purpose if that amount if that warranty and after sale service is sold by the manufacturer. Here warranty and after sale service is not sold by the manufacturer, it is sold by dealer. So it should not enter the value, and that is the decision in Tata Motors 2012 Mumbai. It was held that clause number 7 of that circular were not in conformity with the provisions of the Act, and further as per 43D, pre-delivery inspection and free after sale service charges could be included in the transaction value only when they were charged by the SSE to the buyer. Amount charged towards warranty and after sale service to be added in the value for excise duty purpose only if that amount has reached the manufacturer. Here in this case, that amount never reached the manufacturer, that was charged by the dealer, so not to be added in the value for excise duty purpose. Very important decision, Tata Motors.
Is most important and expected case law, TVS Motors Company Limited, 2016 Supreme Court. In our ICAI relevant case law for November 2016 attempt material, there is one absolutely similar case law, that is the Tata Motors case law. So either you study that case law or you study this case law, it is one and the same thing. Before we actually read the case law here, let me explain you something. How the transaction took place. TVS are selling the vehicles, and for that they have appointed dealers. TVS sell the goods to the dealer. It is the dealer in turn who sell the goods to customer. For example, an example I am saying, TVS has sold goods to the dealer. Transaction value, for example, was 1 lakh rupees. Dealer keeps his some margin, and for example, he sells the good for 1,04,000. But over and above that, dealer has given warranty to the customer. If the customer is interested in warranty, dealer, for example, has charged another 20,000. Please try to understand, warranty to the customer has been sold by the dealer. It is not sold by the manufacturer. Now, whether amount charged by the dealer towards warranty charges or towards after sale service, whether it should be added in the value for excise duty purpose, that is the question. Here the question is whether pre-delivery inspection charges PDI and after sale service ASS charge are to be included in the assessable value. The question is whether this 20,000 which was charged to the customer for pre-delivery inspection or which was charged to the customer towards after sale service, whether it should be added in the value for excise duty purpose. Even before we read case law, let us remember what is the definition of transaction value. What all things are to be added. Transaction value means price paid, over and above price paid by the buyer, any amount which he is going to pay to the manufacturer, whether directly or indirectly, whether at the time of sale or at any other time, which is by the reason of or in connection with the sale of the goods, and it includes, and then there was a list. In that list, warranty and servicing was always there. So the conclusion is, if warranty and after sale service has been sold by the manufacturer to the customer, and if it is charged by the manufacturer over and above price paid or payable, then certainly it should be added in the value for excise duty purpose. Crux of the point I will repeat once again. If manufacturer has sold warranty to the customer and over and above price paid or payable, if some amount has been charged by the manufacturer to the customer, then it should be added in the value for excise duty purpose, and on the full value excise duty will become payable. But here please understand, towards warranty and towards after sale service, amount has not been charged by the manufacturer. It has been sold separately by the dealer. In that case, whether it needs to be added in the value for excise duty purpose, and answer is no. According to the case law, let us try to scrutinize the transaction between manufacturer and dealer. Here, manufacturer had sold car to the dealer where transaction value was 1 lakh rupees. Whether check the 4 conditions of section 41A. Are the goods sold? Yes. Is there any relationship between manufacturer and dealer? No. Is it price the sole consideration? Yes. And was delivery at factory gate? Yes. All constituents of 41A are satisfied, and assessment of this transaction will be completed under section 41A, and assessable value will be equal to transaction value will be equal to 1 lakh rupees. That is the decision. एक बार इसको पढ़ते हैं. Whether pre-delivery inspection charges and after sale service are to be included in the assessable value. Facts. The manufacturer has sold his goods to dealer, and dealer thereafter provided after sale service to the customer and incurred expenditure therefore. The record indicates that apart from the price which was paid by the dealer to the manufacturer, no amount was recovered by the manufacturer from the dealer customer. More so, after sale services are provided by the dealer many weeks after the goods have been sold to him by the manufacturer. So the facts are loud and clear. Over and above price paid, for example 1 lakh rupees in my example, manufacturer has not received single rupee from either dealer or from the customer. Also, warranty was sold separately by the dealer, that too after so many days of the first transaction. What is the point of dispute? Revenue based on certain circulars claimed that pre-delivery inspection charges and after sale servicing charges value should be added in the value for excise duty purpose. Assessee's argument that it should not be included. The discussion. Apex Court observed that where manufacturer himself provide the after sale services and incurs any expenditure thereon, same is not deductible from the price charged by him from the buyer. He says if the manufacturer has sold warranty himself to the customer and for that some amount has been charged, of course it is to be added in the value for excise duty purpose. However, where the manufacturer has sold his goods to the dealer and the dealer thereafter provides after sale service to the customer and incurs expenditure therefore, it cannot be added back to the sale price charged by the manufacturer from the dealer for computing assessable value. If dealer had separately charged to the customer for after sale service and that amount has never reached the manufacturer, it will not be added to the value for excise duty purpose. Such post-sale activity undertaken by the dealer is not relevant for the purpose of excise duty since the goods have already been marketed to the dealer. Also, Apex Court here in the case of TVS Motor observed and brought to the notice that the circulars which you are claiming have already been struck down in the case of Bombay Tires by Mumbai High Court. Then there are some other arguments. The High Court observed that term transaction value. What is transaction value? Transaction value is over and above price paid or payable by the buyer, any amount paid by the buyer to the manufacturer, whether at the time of sale or at any other time, whether directly or indirectly, and which is by the reason of or in connection with the sale, and it includes after sale service and warranty also. That is the first portion. However, the record indicated that apart from the price which was paid by the dealer to the manufacturer, no amount was recovered by the manufacturer from the dealer customer. Thus, the stand of the department that expenses incurred for PDI and ASS was to be included in the assessable value of the car was negated on the ground that the petitioner did not charge the dealer any amount equivalent to the cost incurred towards PDI and ASS. Amount charged towards warranty will have to be added in the value only if it has reached the manufacturer. Here in this case it has not reached. Second point, reference to rule that I already explained. Here the basic sale from manufacturer's point of view was complete here. When goods were sold by the manufacturer to the dealer, sale is complete. All conditions of section 4(1)A are satisfied. Reference to valuation rule is not at all required. Based on all this discussion, in the case of TVS Motor, Supreme Court gave decision that PDI and ASS not included in the value for excise duty purpose.
Next case law, Flex Engineering Limited 2012 Supreme Court. The question is whether Sinvat rate of testing material can be allowed when testing is critical to ensure the marketability of the product. I'll just give you one example. For example, manufacturer is manufacturing machines. So he brings duty paid parts and he manufactures the machine. But as per the terms of the contract, the buyer will accept the delivery of the machine only after testing it. What is decided is like this: the buyer will send his engineer to our premises. In the presence of engineers, a trial run will take place. Engineers of the buyer will observe the trial run, and if they realize that machine is performing properly, then engineers will certify and then buyer will accept the machine. So please understand, unless testing of machine is done, buyer is not going to accept the delivery. In that case, we can say machine became marketable only after testing was performed. Now the question is, inputs which were used for testing, whether excise duty paid on those inputs, whether it should become available as Sinvat credit. And answer is yes. I will repeat my point once again. The buyer will accept the machine only if meets the trial run. So ट्रायल रन के लिए हम लोग जो इनपुट्स परचेस करने वाले हैं वो इनपुट्स के ऊपर की एक्साइज ड्यूटी का सिनवैट क्या मिलना चाहिए, एंड द आंसर इज यस, बिकॉज अनलेस ट्रायल रन इज डन buyer will not accept the machine, and if that is true then we can say that machines became marketable only after trial run. So these are the inputs which were used to bring the final product to the stage the way we are marketing it. So it should qualify as inputs, and excise duty paid on such inputs should become available as Sinvat credit, that is Flex Engineering Limited, 2012 Supreme Court. Next case law is Parag Bosmi Synthetics Limited, 2013 Guwahati. I am really not sure why Institute has kept this still in the case law book, because actually under the present law this case law is overruled. But first I will explain without the amendment. The question is, we know that NCCD credit can be used only for NCCD liability. But the other question is whether other duty credit, for example, SSE has Sinvat credit of basic excise duty. The question is whether basic excise duty credit, can it be used for paying NCCD liability when to the about the period to which this case law belongs. The rules, Sinvat credit rules were silent on this issue. So the court gave the decision that yes, other credit can be used for paying NCCD liability. That is what was said in the case law. I will read the case law for you. The credit of basic excise duty can be used to pay NCCD. This is clearly permissible as per Rule 37. But as you know, from 1/4/2016, one proviso has been added, and now it is that NCCD can be paid only by using NCCD liability. So under the present law, no other credit can be used for paying NCCD liability. Only NCCD credit can be used for paying NCCD liability. Because of this amendment, actually this case law is overruled. I am talking about one overruled case law, which is Parag Bosmi Synthetics Limited, 2013 Guwahati, and that is the reason I have written it, but as well as I have cancelled it. That is Parag Bosmi. It is Bharti Airtel Limited. Let me explain this case law. This is Bharti Airtel. We all know they are telecommunication service providers, and this is the tower. Top part is the antenna. It's called as GSM or microwave antenna. This is classified under capital goods, no doubt about it. And then there is a tower. Tower can be described the technical terms: prefabricated building PFB, isolation transformers, electrical equipments, generator sets, feeder cables. All of them fall under chapter number 73.08 of CETA. Collectively, when they are all assembled, we call them base transformer station. They are brought to the site in CKD, completely knocked down or semi knocked down condition. Part by part they are brought in CKD, SKD form, and they are assembled together. They are fitted to the mother earth and they become immovable. The tower is constructed, on the top of it the antenna is set, and now they can provide telecommunication service. So base trans receiver station, we will call this collectively BTS. Tower in CKD or SKD condition is brought at the site, fixed to the earth, and after it installed it becomes immovable. That is the fact of the case. SSE wants to claim excise duty on all the parts which he has purchased. He says, this is what I am using, this is what I am using for providing my output service. So all of that will become entitled, I will become entitled to avail Sinvat credit of that. Basically SSE has three arguments. SSE says collectively, when you put them together, we can call them composite system, and if it is called as composite system, it will be classified under chapter 85.25 of CETA. As you know, what is capital goods? All goods falling under chapter 82, 84, 85. So all goods falling under chapter 85 are certainly capital goods. First argument of the SSE, collectively we can classify them as composite system, and if it's a composite system it falls under chapter 85.25, so it's a capital good for me, so I should be allowed Cinvat credit. Agar that is not possible, suppose that is not possible, then SSE has another argument. He says certainly antenna falls in capital goods, so it fits into the first part of being a capital goods, and the tower is accessory of the main product. If you remember, capital good means the following goods, namely all goods falling under chapter 82, 84, 85, 90, pollution control equipments, and third part was components, spares and accessories of the goods specified in 1 and 2 above. If what you are brought is accessory of goods falling into first category, also it qualifies as capital goods. SSE says if first argument is not acceptable, then I have another argument. He says tower is accessory of the antenna, so I should be allowed Cinvat credit of antenna under first part and Cinvat credit of tower under second part. SSE बोलता है समझो that argument is also defeated. Then I have third argument. This certainly qualifies as inputs for me. What is the definition of input? Any goods used for providing output service qualifies as input service, qualifies as input. एक बार repeat करता हूँ, inputs के definition में लिखा हुआ है any goods. I said any goods which have been used for providing output service will qualify as input for you. SSE बोलता है या तो first argument या second argument के कारण they qualify as capital goods for me, or because of the third argument they qualify as input for me. Either way, but full Cinvat credit should become available to me. Held. BTS being a single integrated composite system classified under 85.25 CETA is not acceptable. Judge says, I don't imagine that this is a composite system. This can be used independently. Even without the tower, antenna can function. Antenna can be put at the top of the building and it will start functioning. So I don't think that they are composite system. In fact, they have independent functions. So the argument of the SSE that this is a composite system is not acceptable. Second condition, tower being an accessory of antenna is also without substance, as antenna can be installed irrespective of the tower. Again the same argument कि even without the tower antenna can function, so antenna cannot, the tower cannot be called as accessory of the antenna. And third part, basically as we have already said, though it was brought in CKD SKD state, moment it is fixed to the earth, it has become immovable, and to qualify as input it has to be goods, and to qualify as goods it has to be movable. Because now it has become immovable, it is not good, so it cannot be inputs. Even the third argument of the SSE is defeated, and in this case Cinvat credit of antenna was allowed, but Cinvat credit of tower was not allowed. Highly a fact based case. Please study Bharti Airtel Limited 2014 Bombay High Court. We are talking about Haryana Sheet Glass Limited 2015 case law. Very important case law. Strong reasons to believe that this is expected case law. Also, this issue again and again we have discussed in the classroom also, and in my amendment lectures which I have just now uploaded, also this issue has been discussed. Let us try to understand it in the light of this case law. The question is the SSE entitled to avail Cinvat credit of service tax paid on outward transportation of goods cleared from the factory? To explain, this is my factory where I am doing my manufacturing activities, and this is the buyer. Goods were cleared from the factory, transportation was incurred, and goods were to be delivered at buyer doorstep. Whether GTA service taken for removal of goods from factory doorstep up to buyer doorstep, whether that should qualify as input service, that is the question. And as you know, it depends on which is the place of removal. In my amendment lectures, I have explained you one situation. For example, here the buyer has insisted that delivery please be given at his doorstep. When the goods are delivered to him, his engineers will check the goods. If the goods are defect free, then he will accept the delivery. If these are the terms and conditions, then we can certainly say that sale was completed at buyer's doorstep, and in that case place of removal is buyer's doorstep. What is input service? If you remember definition of input service is any service in relation to your final product up to place of removal. So if place of removal is buyer's doorstep, then certainly GTA services taken for removal of final product from factory gate up to buyer's doorstep will qualify as input service. Obviously you are also going to understand that excise duty will be paid on value of the goods till doorstep of the buyer. That is what we have already discussed. Let us read the case law once again. Facts of the case. Assessee avails innovative credit of service tax paid on outward transportation of goods cleared from the factory. Goods were cleared from the factory and they were delivered at buyer's doorstep. For example, for that GTA services were taken. What about service tax paid on those GTA services? Assessee has availed them as Sinvat credit. Whether he can avail that? Revenue said that it does not qualify as input service. Logic must be the same. What is input service? Any service which has been taken by the manufacturer in relation to his final product up to place of removal. So if we decide that factory gate was place of removal, it will not qualify as input service. But if we decide that buyer's doorstep was place of removal, then certainly it will qualify as input service. Revenue said that it will not qualify as input service, and assessee was claiming that it qualifies as input service. Here in the discussion I have given the same thing. Once I will repeat it for you. As per provisions of Central Excise Act, read with Sale of Goods Act, payment of transportation, inclusion of transportation charges in value, payment of insurance, or who bears the risk or not, are not the relevant consideration to ascertain the place of removal. The place where sale takes place or when the property in good passes from seller to the buyer is the relevant consideration to determine the place of removal. So if place of removal is buyer's doorstep, certainly this will qualify as input service. Judge on the scrutiny of the facts of the case said that it will qualify as input service and HCC will be entitled for Sinvat credit. The place of removal is question of facts. Please understand. First we have to decide which is place of removal, and that is decided by facts available in the case. The judge said in the given sale, in the given contract, from the fact of the case it is loud and clear that place of removal is buyer's doorstep. The judge said the place of removal is question of fact. In the given case there is no evidence that the property in goods stood transferred to the purchaser at factory door. Therefore, assessee is entitled to avail Sinvat credit of service tax paid on outward transportation of goods cleared from the factory. Because as per facts of the case, place of removal is buyer's doorstep. That is why GTA services taken in relation to final product for removal of final product from factory gate up to buyer's doorstep will qualify as input service. Therefore, Sinvat credit of the same will be available to the assessee. This is Haryana Sheet Glass Limited 2015 case law. Is Bansal classes case law? I'll explain that case law with the help of this slide. Bansal classes are a service provider. They are in the business of providing commercial training and coaching services, normally to service receivers who are students. Now, in the process, they have taken certain services, they have availed certain services. The services are of catering, photography and tents which are used for celebrations during academic sessions. What happens is that every year, at some point of time, they will organize some celebrations where in those celebrations a function is arranged for which catering is required, photography is required and tents are required. The idea behind this function is rewarding the old students, and that will create as a morale boosting for existing students. So that from that point of view, every year they are performing certain functions, and in relation to that function they are taking services like catering services, photography services and tent services. Also, Whenever examinations are to be conducted from time to time, they are taking classrooms on rent. So they are availing another service called as hiring of examination hall on rent basis for the purpose of conducting examination. Also, they have their own motor vehicles. They are availing services in relation to motor vehicle, namely maintenance and repair services in relation to motor vehicles which they maintain. Also, for business development, they are doing traveling, and for that certain services are availed which are called as traveling services in relation to business tours. Whether all of this will qualify as input service. Again, what is the definition of input service? Any service which you are availing in relation to provisioning of your output service is input service. Here I have given the definition of input service as part of discussion. For service provider, input service means any service used by the provider of output service for providing an output service. Also, there is an includes part of that. The court said that the first service, namely the services of catering, photography and tents, does not qualify as input service. The logic is very simple. It is in relation to rewarding the students who are old students. So it is not in relation to the output service. What is the output service? Commercial training and coaching service. Rewarding the old students is nothing to do with the output service of providing commercial training to existing students. So court disallowed this. Or hiring of examination, obviously it is in relation to your output service. So Sinovat credit of hiring of examination hall on rent, service tax paid on that was allowed as Sinovat credit because it qualifies as input service. But again, motor vehicles which are maintained for the use of the owners has nothing to do with the output service. So this does not qualify as input service. Also, the traveling expenses has nothing to do with the basic provisioning of output service. So this also does not qualify as input service. That is what he had said. Please read Bansal classes 2015. We are talking about Rane TRW Steering Systems Limited 2015 case law. What happened is like this. This is the factory. Now for the housekeeping, they have taken input service in relation to housekeeping and landscaping services so as to maintain the factory premises in eco-friendly manner. Whether services taken in relation to housekeeping and landscaping of the factory so as to keep it in eco-friendly manner, whether that will qualify as input service, that is the question considered here. Please understand that first of all, in the definition of input service, here I have reproduced definition of input service in the includes portion. I will read it for you. Input service means any service used by the manufacturer, whether directly or indirectly, in or in relation to manufacture of final product and clearance of final product up to place of removal. That is one part of it. And then there is one includes part, and includes services used in relation to modernization, renovation or repairs of the factory. The judge said this service, which is housekeeping and landscaping services, certainly qualifies, certainly fits into this includes part. This certainly can be said as a service which is used in relation to modernization or renovation of a factory. Judge allowed Sinovat credit of this service. Another 2-3 arguments are given in the decision. Please understand, there are so many environmental laws, and the manufacturer, if you want to continue to do your business, will have to cope up with all the laws. So under the environmental laws, if you are required to maintain your factory garden properly, then certainly it is part of your cost. When you value your final product for excise duty purpose, in that these costs are also included. Also, there is a concept of social responsibility. As a part of environment friendliness, also as an organization, as a manufacturer, you have certain responsibilities, and whatever activities you are doing so as to meet these responsibilities, all that enter cost of final product. And when you pay excise duty, you are also paying excise duty on all these costs also. Having said all these things, this service was allowed as input service. So basically two sets of arguments are given here. First, in the basics definition of input service also fits in, because certainly this service can be called as service is in relation to modernization, renovation or repair of the factory. So certainly it fits into the definition of service also. That is one set of logic, and other set of logic while arriving at the total cost of the product on which you pay excise duty. Certainly all expenses that manufacturers including so as to meet environmental laws or so as to meet his social responsibility are also included. So that is another logic given in this case law. This is Rane TRW Steering Systems Limited.
It's very simple case law again. SSE avails some input service. Not sure about taxability of this input service. For example, value was 1 lakh. Ignoring SBC, say service tax liability was 14,000. But this is the service which is covered by reverse charge. Liability to pay service tax will 100% on service receiver. So if at all this service is taxable, 14,000 is the amount payable by SSE to the government. Thinking that this service is taxable, SSE paid 14,000 to the credit of central government. Please understand, this is service tax paid on his input service, which again he is eligible to avail it as Sinvat credit. So he avails Sinvat credit of 14,000 also. I'll repeat, SSE received one input service, value of service was 1 lakh, service tax liability thereon was 14,000. This service is covered by 100% reverse charge. Thinking under the wrong notion that this service is taxable service tax liability thereon, SSE paid to the credit of central government 14,000 rupees, and because it is his input service and this is service tax paid on input service under reverse charge, he is entitled for Sinvat credit and he availed it. Sinvat credit of 14,000 was availed. Now, whether he justified in availing this Sinvat credit, if you come to know that there was no service tax liability, whether you have to compulsorily go for refund or even availment of wrong service tax paid, even Sinvat credit availment of wrong Sinvat credit, even availment of Sinvat credit of wrong service tax paid, whether it is allowed. And in Tamil Nadu Petro Products 2015, Madras High Court gave decision, if upon misconception of the legal position, if SSE has paid the tax that it was not liable to pay, and such SSE also happens to be an SSE entitled to take Sinvat credit, availing of the said benefit cannot be termed as illegal. So SSE can avail this Sinvat credit. There is no bar on availing this Sinvat credit. That is the case law, Tamil Nadu Petro Products Limited, 2015, Madras.
Next case law, Tata Advanced Materials Limited, 2011, Karnataka. The question is whether the assessee is required to reverse Sinvat credit availed on capital goods destroyed by fire when insurance company reimburses value of such capital good inclusive of excise duty. Before we read this, Sinvat credit rules में capital goods का क्या treatment है? 100 plus 10, 110. I purchase capital good, maybe 50-50, but ultimately full Sinvat credit will be available to me. If this capital good without use in the factory, if I have removed it as such, 3/5 becomes applicable and amount will be payable equal to 100% of Sinvat credit. मैंने बोला, if capital good which you have purchased without putting to use, if you have removed it from your factory, then rule 3/5 of Sinvat credit rule becomes applicable and you have to give up full Sinvat credit. Alternatively, if capital good was put to use, then 3/5A becomes applicable and you have to give up proportionate Sinvat credit. Calculated as per formula. If you remember computer peripherals, there is a table, and for other capital goods, it is 2.5% per quarter or part of the quarters. So, if capital good is used within the factory and after use, if it is removed as such, then 3/5A becomes applicable and you have to proportionately reverse your SINVAT credit. Another option, if capital goods without use is written off in books of account, then 35B becomes applicable and relatable SINVAT credit you have to give up. These are the possible treatments to the SINVAT credit of capital good. Here, facts of the case. The assessee purchased some capital goods and paid the excise duty on it. Since the said capital goods were used in the manufacture of excisable goods, he claimed the SINVAT credit of excise duty paid on it. However, after 3 years, said capital goods were destroyed by fire. If it is destroyed by fire and assessee has received a claim from insurance company, whether he will have to reverse the SINVAT credit, and answer is no. अभी मैंने बोला कि कैपिटल गुड्स के सिनवैट क्रेडिट के कितने सारे ट्रीटमेंट्स है, एक है रिमूव्ड एज सच, एक है रिमूव्ड आफ्टर यूज, एक है रिटर्न ऑफ इन द बुक्स ऑफ अकाउंट, बट दिस पॉसिबिलिटी इज नोवेयर मेंशन्ड इन द सिनवैट क्रेडिट रूल्स, सो assessee need not reverse SINVAT credit. It was held that merely because the insurance company paid the assessee value of goods including the excise duty paid, that would not render the availment of SINVAT credit wrong or irregular. Excise department cannot demand reversal of credit or payment of the said amount. That is Tata Advanced Materials Limited, 2011, Karnataka. For the next case law, Ashok Kumar, 2010, Mumbai, once I recommend that you should also read language written in Rule 15.1 of SINVAT credit rules. There it is very clearly written that a penalty is levied on the person who has availed wrong SINVAT credit. I'll repeat, 15.1 के लैंग्वेज में लिखा है कि 15 का जो पेनल्टी है that is leviable on the person who has availed wrong SINVAT credit. Now the question is whether penalty can be imposed on the directors of the company for wrong SINVAT credit availed by the company. The court observed that word any person used in Rule 13.1 of the old rule, which is now substituted by 15.1. So I will read it as 15.1. The court observed that words any person used in 15.1 of SINVAT credit rule clearly indicates that person who has availed SINVAT credit shall only be the person liable to pay penalty. 15.1 language rules we have to take literally. 15.1 language is very clear. Penalty under this rule can be only put on person who has availed wrong SINVAT credit. Here, assessee has availed the wrong credit, the company, so penalty can be put on him, but not on the directors of that company. That is the decision. The directors of the company could not be said to be manufacturer availing SINVAT credit, and penalty cannot be imposed on them for wrong SINVAT credit availed by the company. Please read Ashok Kumar, 2010, Mumbai. Please understand next case law as completely fact-based case law. Stelco Strips Limited, 2010. The question is whether SINVAT credit can be availed based on private challan. What the court has given decision is as follows. If payment of excise duty has not been demanded, if receipts of inputs has not been demanded, and eligibility of SINVAT credit has not been questioned, then even based on private challan, SINVAT credit can be availed. Here, High Court observation, once duty payment is not disputed, earlier manufacturer has paid the duty, that is not disputed, and it is found that documents are genuine and not fraudulent. There is no dispute about payment of excise duty, there is no dispute about genuinity of documents. The manufacturer would be entitled to SINVAT credit of duty paid on inputs. If the duty paid character of inputs and their receipt in manufacture factory and utilization for manufacturing a final product is not disputed, credit cannot be denied. If it is factual and if its credentials are high and nowhere there is a dispute or confusion about payment of duty or receipt or use of inputs, then even based on private challan also, SINVAT credit can be availed. Please take it as absolutely fact-based case law. Stelco Strips Limited, 2010. Finner India Limited. Before we read this case law, little discussion about what we have studied about SINVATability of inputs. Sinvat credit of input is allowed as soon as inputs are received in the factory, and Sinvat credit of input is subject to condition that inputs are used within the factory. Today I have received my inputs in the factory, selling price plus excise duty. Under rule 4.1 of Sinvat credit rule, as soon as inputs are received in the factory, I can avail Sinvat credit. I have availed the Sinvat credit and I have put that Sinvat credit into my storeroom. Sinvat credit is allowed as soon as it is received, but there is one more condition, that inputs should be used within the factory. So what are the various possibilities? We have discussed them all in the classroom. For example, even before I could use the inputs in my manufacturing process, fire took place and inputs are lost and destroyed. Now we cannot say that I have used those inputs in my factory and will have to reverse that Sinvat credit. Second possibility, inputs which are received in the factory, you find that they are defective and you remove them as such, you return it to the earlier manufacturer. Rule 3.5 of Sinvat credit rule will become applicable and you have a liability equal to amount equal to Sinvat credit that you have availed. So if inputs are removed from the factory as such, still we cannot say that inputs are used in the factory and we'll have to give up the Sinvat credit. Third possibility, inputs are received in the factory, you have availed the Sinvat credit, but sooner or later you have found that inputs have become absolute. You have written them off in your books of account. Rule 3.5b of Sinvat credit rule will become applicable. Inputs on which you have taken Sinvat credit, if you have written off them in your books of account, your liability under 3.5b, your liability is equal to amount equal to Sinvat credit that you have availed. So in other words, the rule is saying you yourself are writing off the inputs in your books of account. That means you are claiming that you are not going to use those inputs, then you will have to give up that Sinvat credit. Last possibility, inputs are there in my factory, I have issued them to manufacturing process, I got them converted into final product, I store the final product in my factory. But even before I could remove my final product, the final product is lost and destroyed. I completed procedure of rule 21 of central excise rules and I got excise duty on this final product remitted. Now rule 3.5c will become applicable and I will have to reverse that Sinvat credit. These are the all provisions about inputs. Now I come to the present case law. Here what has happened is like this. Manufacturer has brought some inputs. Under rule 4.1, as soon as inputs are purchased, he has availed Sinvat credit. He has kept those inputs into his storeroom. He issued it to the manufacturing process. Inputs got converted into WIP. They are at WIP stage, but something terribly went wrong and WIP is lost and destroyed. Now whether Sinvat credit needs to be reversed, that is the question. Can the Sinvat credit availed on the inputs contained in the work in progress destroyed on account of fire be ordered to be reversed? I think I have already explained you all the possibilities. One possibility was inputs was destroyed by itself. If inputs is destroyed, you cannot say that you have used it in manufacturing process and you will have to reverse Sinvat credit. Second possibility was without using inputs in the factory, you have removed them as such. Still you have to reverse the Sinvat credit. Third possibility, you have written off inputs in your books of account. 3.5b becomes applicable and you will have to reverse Sinvat credit. Last possibility, inputs got converted into final product and final product is lost and destroyed. Under rule 21, you have taken remission and in that case 3.5c becomes applicable and you will have to reverse Sinvat credit. But WIP ke baare mein there is no rule. So logically the answer is that no reversal of Sinvat credit is required. Let us read it together. Facts. The respondent assessee was engaged in manufacturing of oil seals. On account of fire accident in the factory, the work in progress stock was burnt and rendered unfit for usage. The assessee has availed Cinvatcrate on raw material which were used for production of these oil seals. एसएससी ने इनपुट्स लेके आया था, उसने उसको WIP में कन्वर्ट किया था और WIP डिस्ट्रॉय हो गया. पॉइंट ऑफ डिस्प्यूट, revenue is saying that relatable Cinvatcrate is to be reversed. Assessee is saying which rule? Relatable Cinvatcrate is not to be reversed. Discussion. It was not in dispute that inputs were in work in progress stage. There is no dispute about the fact that inputs have reached work in progress stage. If inputs have reached work in progress stage, certainly we can say inputs have been used in the factory. Discussion. It was not in dispute that inputs were at work in progress stage when they were destroyed in a fire accident. The inputs, if used within the factory, then assessee need not reverse the credit availed on such inputs. 35C can be invoked only where on any goods manufactured or produced by an assessee, the payment of duty is ordered to be remitted under Rule 21 of Central Excise Rule. Reversal of Cinvatcrate of inputs under Rule 35C becomes applicable if final product is lost and destroyed, and excise duty on such final product you have taken remission under Rule 21 of Central Excise Rule, then only Rule 35C becomes applicable. Rule 35C is not applicable if work in progress is lost and destroyed. Held. Cinvatcrate need not be reversed. Cinvatcrate need to be reversed only when payment of excise duty on final product is ordered to be remitted under Rule 21 of Central Excise Rules, which deals with remission of duty. In the present case, the assessee has not claimed any remission and no final product has been removed. Hence, assessee need not reverse the Cinvatcrate taken on inputs contained in the work in progress destroyed in fire. None of these provisions which we have discussed are applicable if inputs are lost and destroyed when they were at work in progress stage. That is the conclusion of Fenner India Limited 2014 Madras High Court. Pentex Industries Limited 2015 Supreme Court. Certainly it is one of the most important and expected case law. Also please remember, this case law has overruled one of the old case laws which was given in institute material. At the bottom of this page I have given that this case law has overruled Rajasthan High Court decision in the case of Rajasthan Textile Mills reported in selected cases in direct and indirect tax laws. So that old case law has been overruled by this case law. Let us understand this. As a manufacturer, I am doing this activity. I am purchasing inputs, excise duty paid. I am converting my inputs into final product and I am exporting my final product. While exporting, I have exported them under Rule 18. So on my selling price, I have paid excise duty. As you know, export procedures, there are two export procedures. One is Rule 18 and one is Rule 19. In Rule 18, when you remove your final product, you pay excise duty, export that final product, complete certain procedure and take rebate of excise duty that you have paid. In Rule 19, you remove your final product without payment of excise duty but on execution of bond. You remove your final product, you export your final product, you complete certain procedure and you get your bond cancelled. Here we are going to talk about Rule 18. So in Rule 18, I purchase inputs excise duty paid, I convert them into final product, I remove my final product, my final product is removed on payment of excise duty and then I complete export procedures and I export the goods. Now I am going out for a rebate. Under Rule 18, can I get rebate of excise duty paid on final product as well as excise duty paid on inputs? Whether that is allowed. एक बार Rule 18 read करते हैं as it is. Here I have reproduced Rule 18 for you. Rule 18, where any goods are exported, central government may by notification grant rebate of duty paid on such excisable goods or duty paid on material used in the manufacture or processing of such goods. Literal interpretation of Rule 18 says you will get rebate either of excise duty paid on your final product, or you will get rebate of excise duty paid on inputs. Here the word uses or. Whether both rebates can be claimed, that is the question under discussion. Here there is some discussion, there is some other issues to put up my case. Judge says, look at Rule 19. When you study Rule 19, your inputs you can get without payment of excise duty. If you are an exporter, Rule 19 allows that you can get your inputs without excise duty, and Rule 19 also allows to remove your final product without payment of excise duty. In other words, from the study of Rule 19, it is loud and clear that you can get your inputs also without excise duty, and you can remove your final product also without excise duty. It is not possible that one rule is allowing inputs without excise duty and another rule is not allowing inputs without excise duty. Also, if you check this on the basic framework of taxation, the policies which government has adopted, if you see all the export policies of the government, policies are simple and straightforward. Export goods and services and not taxes. If it is in relation to exports, always policy of the government is zero rating. If that is true, just because of one simple word or in a given rule, the things cannot change. Here, very beautiful English is given in the decision. I will read it for you. The Supreme Court held that normally the two words or and are to be given their literal meaning. Or is to be read as or and is to be read as and normally. However, where use of such word produces absurd results, the court has power to read the word or as and vice versa. If result is absurd, then certainly the word or can be interpreted as and. This case is in line with the government's policy of neutralizing the duty element on the goods exported with a view to promote exports of domestic product and make them internationally competitive. If you read this word or as and, then certainly it becomes logical and it matches the otherwise philosophy of government policy. Government policy is always, if it is export, it is zero rated. So ultimately, literal word or, we are taking it as and. That is the decision in the case of Spentex Industries Limited, which has overruled the old decisions of Rajasthan Textile Mills.
Is Raghav Industries Limited, 2016, Madras. Before we study this case law, कुछ समझते हैं. We are talking about basically an exporter assessee. He has purchased inputs, excise duty paid. He has purchased input services, service tax paid. Using this, he has manufactured his final product, and if he is exported his final product. Then there are schemes under customs, there are schemes under excise, there are schemes in service tax where they are trying to rebate or refund the duty incidence that has been suffered by this final product. If it is export the goods and services, not taxes, is the philosophy, and it goes with destination based principle of taxation. So there are so many schemes. The schemes are either in Customs Act, or they are in excise, or they are in service tax. The schemes are such which try to give rebate or refund of excise duty and service tax. For example, in customs, it is duty drawback scheme. In excise, either it is Rule 18 or Rule 19, the export procedures, where you get rebate of excise duty paid, or you get you can export your final product without excise duty incidence under bond, or that can be Sinovac credit. If you remember, if you are able to export your final product under Rule 19, your Sinovac credit will remain unutilized. normally refund of Cinvat credit is out of question. But if you are exporter SSC, Rule 5 of Cinvat credit rules gives refund of unutilized Cinvat credit. So एक्साइज में दो तरीके हैं आपका ड्यूटी इंसिडेंस वापस देने के लिए, either export your final product under Rule 18 and take rebate of excise duty that you have paid, or export your final product under Rule 19 and unutilized Cinvat credit you can take refund under Rule 5 of Cinvat credit rules. Also in service tax also we have studied so many rebate notifications. All these have been designed in such a way that exporter excise duty incidence and service tax incidence has been rebated or refunded. But one common principle will be applicable to all, that your total benefit cannot exceed your total duty incidence. If you have already taken duty drawback under customs, then your benefit under excise or benefit under service tax will be restricted to that effect. If SSC tries to take rebate and refund the benefit under all the acts simultaneously, he will get benefit of more than what cost he has incurred, and that is not allowed. That is very simple and accepted principle. This is one part. So what I have concluded here, that even if so many schemes are available, simultaneously you cannot approach all the departments and take benefit. Your total benefit will be restricted to your total duty incidence. That is the crux or the original principle common to all these benefit schemes, all the rebate and refund schemes. That is one thing we have to understand before we study this case law actually. And second thing we want to understand is Spentex. Spentex case law we have already studied in RTP May 2016, but उसका थोड़ा रेफरेंस चाहिए. Spentex में क्या हुआ था? The question is like this: inputs are excise duty paid and final products have been removed, excise duty paid. Is it possible that under Rule 18 you can take rebate both of excise duty paid of final product as well as excise duty paid of inputs? In Spentex, Supreme Court gave decision that in Rule 18 the word or has to be interpreted as a and both the benefits simultaneously are allowed. But this is, of course, this is subject to one condition, that excise duty paid on inputs you have not availed Cinvat credit. If you have availed Cinvat credit, then this rebate will not be allowed, because this Cinvat credit you will use while paying your excise duty liability, and then in that case, suppose you have availed Cinvat credit of excise duty paid on your inputs, now rebate will not be allowed. So Spentex said, Spentex case law, Supreme Court said that yes, if you allow following two procedures, simultaneously you can take rebate of excise duty paid on final product as well as excise duty paid on inputs also. But उसमें जो लिखा नहीं है, but which is the assumption, is that this rebate will be allowed subject to condition that you have not availed Cinvat credit of that. Otherwise this will also result into double benefit. So this is one thing we have to remember. Now we can have a look at the case law. Raghav Industries, SSC, is an exporter. Inputs, excise duty paid, input services, service tax paid, used for manufacture of final product, and he has exported his final product. He wants duty drawback under Customs Act, and he also wants rebate under Rule 18 of Central Excise Act, whether that is allowed. Page number 5, Raghav Industries Limited, 2016, Madras High Court. Can rebate under Rule 18 of Central Excise Rule 2002 be claimed of the excise duty paid on goods exported when the duty drawback of excise duty paid on input and input service tax paid on inputs used in the manufacture of such export good has already been availed? When you have already availed the duty drawback, whether you can claim rebate of Rule 18 of Central Excise Act. Facts: the petitioner manufactured the synthetic yarn and blended textile yarn and exported the same on payment of excise duty by utilizing the SINVAT credit of duty paid on capital goods used in the manufacture of such yarn. The yarn is made up of the duty paid raw material with polyester staple fiber, polyester viscose staple fiber. It filed the claim for rebate of excise duty paid on such finished goods under Rule 18 of Central Excise Rules 2002. The petitioner did not avail the SINVAT credit of duty paid on the raw material. Since the yarn exported by it was covered under duty drawback scheme, it claimed duty drawback of the excise duty paid on input and service tax paid on input services. He has already taken duty drawback under duty drawback scheme and now he is also applying for rebate under Rule 18. Point of dispute, revenue. Obviously revenue rejected. They said that if we give you both, it will amount to double benefit. That is the argument of the revenue. And assessee is relying on apex court judgment in Spentex Industries. assessee का argument था Spentex Industries का केस लॉ मुझे एप्लीकेबल है. Spentex Industries के केस लॉ में सुप्रीम कोर्ट ने बोला था कि इनपुट का एक्साइज ड्यूटी और फाइनल प्रोडक्ट का एक्साइज ड्यूटी को साइमल्टेनियसली रिबेट हो सकता है. So based on that decision, which is equally applicable to my case, I should be given also duty drawback, also rebate. The discussion. First of all, whether Spentex case law is really applicable here. The judge said Spentex case law is not applicable to you because in Spentex both the claims were under Rule 18 of Central Excise Rules. Here your one claim is under Customs Act, one claim is under Excise Act. So facts of that case and facts of your case are different. Spentex is not applicable to you. एक बार रिपीट करता हूं, एकदम सिंपल आर्गुमेंट है. क्या स्पेंटेक्स ये वाले एसएससी को एप्लीकेबल है? स्पेंटेक्स का बेस क्या था? इनपुट का रिबेट अंडर रूल 18 ऑफ सेंट्रल एक्साइज रूल और फाइनल प्रोडक्ट का रिबेट अंडर रूल 18 ऑफ सेंट्रल एक्साइज रूल. सो both the issues were under Central Excise Act and rules made there under. Here you are asking for rebate under Central Excise Act and rules and duty drawback under Customs Acts and rules. So facts of your case and facts of Spentex are not similar. So Spentex is not applicable to you, forget it. That is the first 2 points I have discussed. Third point, duty drawback, AIR, Rule 3, very clearly written. I am reading point number 3 for you. As per proviso to Rule 3 of Central Excise Duties and Service Tax Drawback Rules, the petitioner was not entitled to claim both the benefits. If you remember, Rule 3 में एक proviso है, वहाँ पे वो लिखता है, if you have taken benefits under some other act, your duty drawback will be restricted to that extent. So, if you have already taken benefits, then under Central Excise Act, you are not entitled for any benefits under Customs Act. Fourth point is just a repeat. Here we are trying to discuss that simultaneously taking rebate under Rule 18 and duty drawback under Customs Act will amount to double benefit, which is not acceptable. Based on all these arguments, it was held in Raghav Industries Limited 2016 Madras High Court case law that rebate is not allowed. Please, because of the complexity and because Spentex is also involved in this decision, examiner may love to ask you question based on this case law. Please take this case law very seriously.
Next case law, Hans Steel Rolling Mills 2011 Supreme Court. Please accept it absolutely as fact-based case law applicable only for that period. The question is whether time limit under section 11A of Central Excise Act 1944 would be applicable to recovery of amounts due under compounded levy scheme. First, I want to talk about 11A. What is 11A about? For non-levy non-payment, short levy short payment or for erroneous refund. If officer is of the opinion that assessee has done one of these wrong deeds, then under 11A1, if officer is convinced that assessee is innocent, he can issue show cause notice. And in the amended position, today in the amended position, the time limit, section 73 was also amended where they have made it as 30 months, and in excise, amended time limit for section 11A in innocent cases is 24 months. So if assessee is innocent, time limit in the amended position is 24 months and in fraud cases it is 5 years. So first I have explained you what is the time limit to issue show cause notice under section 11A. If officer is of the opinion that assessee is innocent, time limit is 24 months, and if officer is of the opinion that assessee is fraud, then time limit is 5 years. That was section 11A, time limit. Now I want to remind you about rule 15 of central excise rules. This is talking about compounded levy scheme. There are some notified goods, for example aluminium patti pattas, where assessee has been given a choice to pay excise duty differently based on his annual capacity and based on his factors of production. Some duty liability will be determined for the assessee. Normally, how you are paying excise duty? Normally you are paying excise duty based on your actual removals. But Rule 15 of central excise rules is talking about compounded levy scheme. Based on certain factors of production, department will determine your excise duty liability payable and that you will pay. Now once you have opted for compounded levy scheme, for example compounded levy scheme के अंदर गवर्नमेंट ने आपको बोल दिया that you have to pay 1 lakh rupees per month as your excise duty liability. Now all what you have to pay is 1 lakh rupees and not based on actual removals. That is compounded levy scheme, the study of which we have already done in the classroom. Now the question is, normal time limit given by section 11A, whether it is equally applicable to default under compounded levy scheme, and the courts has given the decision no. What the court's logic is? Court is saying compounded levy scheme is an independent scheme. All the terms and conditions, all the limitations, which are all the procedures of compounded levy scheme should be inbuilt within the scheme. It is independent scheme. The normal provisions of the act or the normal provisions of the rule will not be applicable to compounded levy scheme. That is the decision here. In the case of Hunt Steel Rolling Mills 2011, Supreme Court has held that time limit under section 11A of Central Excise Act 1944 is not applicable to recovery of dues under compounded levy scheme. If this case law comes in our examination, you have to qualify your answer that this was the decision applicable for the period under consideration, and you have to answer it completely as fact-based case law. Hunt Steel Rolling Mills 2011 Supreme Court. Sanjay Industrial Corporation 2015 Supreme Court. Before we understand this case law, I have to tell you something. Amended 11AC, which we have studied just now, Amendment 2015, is little different from the way 11AC was before amendment. Today, amended 11AC, if short payment is by reason of non-payment is by reason of bona fide reasons, innocent reasons, then normal period of limitation 1 year and penalty is at 10% or 5,000, whichever is higher. And if it is by reason of fraud, then extended period of limitation 5 years and penalty which is equal to 100%. This is how 11AC is. But this case law belongs to period before 2015. That time, if it was bona fide case, then duty was payable, along with that interest was payable and no penalty was payable. Fraud cases, duty was payable, interest was payable and 100% penalty was payable. There were another two choice, there were in all two choice where books of accounts are maintained and books of accounts are not maintained, but let us not get into that, that is all history. Broadly I can say if it was fraud case, duty was payable, interest was payable, and 100% penalty was payable. We are talking about that period. So in a given case, if non-payment of duty is by reason of bona fide reasons, in a given transaction, only normal period of limitation is equal to 1 year will become applicable, and duty will become payable and interest will become payable, but no penalty will become payable. But if we say that given case non-payment is by reason of fraud, in that case duty will become payable, interest will become payable, penalty will become payable, and extended period of limitation of 5 years will become payable, or will become applicable. So having said that, now let us find out Sanjay Industrial Corporation 2015 Supreme Court. Let me explain you. This assessee was doing an activity. He was bringing his inputs and converting it into final product, and this he was doing for years together, and never he paid any excise duty. He had a strong belief that his activity does not amount to manufacture and he has no excise duty liability. As far as department is concerned, department was also in a doubt. Department was also not sure whether or not process amounts to manufacture. That is the fact. Suddenly today some case law has taken place, and in that case law court says that this process amounts to manufacture. Based on that case law, department will immediately issue show cause notice. Whether show cause notice for normal period of limitation, which is for 1 year, demanding duty and interest, whether this is applicable, or whether extended period of limitation, 5 years, duty, interest and penalty is payable. What do you think? What do you think, having heard this fact? एक बार खाली repeat करता हूँ. If it is non-payment by bona fide reason, normal period of limitation is applicable and no penalty is payable. If it is fraud cases, then extended period of limitation is applicable and 5 year duty, interest and penalty can be demanded. Here is a case where assessee was not paying excise duty, thinking that process does not amount to manufacture. Department was also in a doubt now whether this short payment you will consider as bona fide or fraud. I think answer is very simple. This is bona fide case. Extended period of limitation is not applicable, penalty is not payable. Let us read this case law. In a case, revenue authorities themselves have doubt about the dutiability of a product, can extended period of limitation be invoked, alleging that assessee has suppressed the facts? Sanjay Industrial Corporation 2015 Supreme Court. Facts. In this case, the appellant was engaged in the business of cutting larger steel plates into smaller sizes and shapes as per the requirement of the customers. After cutting the plates as per the customer specification, same were supplied to them. This process is known as profile cutting. It referred revenue, but then suddenly some case law took place. Assessee strongly believed that the process does not amount to manufacture and he was not paying any excise duty. But suddenly one case law took place, Messrs. Pioneer Profile Industries Pune. In that case law, it was said that process amounts to manufacture, but the order said that the process amounts to manufacture, but that is bona fide reason. The manufacturers never knew that, so the judge said there that it is a bona fide non-payment. So though duty is payable, normal period of limitation is applicable, extended period of limitation is not applicable, and because of that penalty is not payable. But here revenue issued show cause notice. Revenue said that process amounts to manufacture, extended period of limitation is applicable and you have to pay duty with penalty. Assessee said penalty could not be imposed invoking extended period of limitation as there was no suppression of fact. Our non-payment was on bona fide reason. It was held extended period of limitation could not be invoked and penalty was set aside. I have already given you the logic. You can read the case law yourself. Because the non-payment was on bona fide reason, normal period of limitation will become applicable and penalty is not payable. Sanjay Industrial Corporation 2015 Supreme Court. Next case law is Jay Kumar Lohani 2012 and Madhya Pradesh. The facts of the case law are like this. Once the goods are seized, now officer will start proceedings. By starting the proceedings, he can issue show cause notice for confiscation of the goods and simultaneously he can issue show cause notice for adjudication of penalty. Here what the officer has done, he has issued show cause notice and started confiscation proceedings. The confiscation proceedings are on, they are yet not concluded. Assessee is cooperating and confiscation proceedings are on. But meanwhile, officer issued a separate show cause notice for adjudication of penalty also. Assessee objected. Assessee said, now that you have issued me show cause notice for confiscation of the goods and the proceedings related to that are on, second show cause notice for penalty can be issued only after first proceedings are over. The question is, why first notice when show cause notice has been issued for confiscation and the adjudication of which is in process, simultaneously by issue of second show cause notice can officer start penalty proceedings? And the answer is yes. It was held, the High Court held that there was no legal provision requiring authorities to first adjudicate the notice issued regarding confiscation and only thereafter issue show cause notice for recovery of dues and penalty. So, in absence of such provisions, officer can very well do this. He can issue show cause notice for confiscation of goods and even before the proceedings have been finalized, he can issue second show cause notice demanding duty and penalty. That is Jay Kumar Lohani 2012 Madhya Pradesh. Next case law is Balaji Trading Company 2013, a very simple case law and it is about Rule 25 of Central Excise Rules. First please understand what has happened. Manufacturer has removed the goods fraudulently and he has stored them with Balaji Trading Company. Balaji Trading Company is a dealer of the goods. Please understand, he is neither manufacturer nor producer, neither he is a warehouse keeper, neither he is a first stage dealer nor he is a second stage dealer. He is only a simple trader of the goods. If that is true, the question is whether penalty under Rule 25 of Central Excise Rule can it be levied on Balaji Trading Company? And the answer is no. Please read Rule 25 in our book. The opening line of Rule 25 says that this penalty, the penalty under Rule 25 can be put only if you are a manufacturer, producer, first stage dealer, second stage dealer or a warehouse keeper. Whereas Balaji is none of them. In that case, Rule 25 penalty cannot be put on Balaji Enterprises. Please understand, Balaji Enterprises is only a dealer and Rule 25 can be, penalty under Rule 25 can be imposed only if you are a producer, manufacturer, registered person as a warehouse, matlab warehouse keeper or registered dealer, matlab if you are a first stage dealer or second stage dealer. If you are none, then Rule 25 penalty not possible on you. Balaji Trading Company 2013 Delhi. Next case law is Nanumal Glass Works 2012 Allahabad. If you remember, under section 37C, a valid show cause notice is to be served on the assessee. And what do you mean by serve? It can be physically tendered to him or it can be sent by registered AD. If assessee is not accepting it, then it can be fixed on the factory gate of the assessee. If assessee is not to be found or his factory is not found, then show cause notice can be fixed on the door of his residence, and if residence is also not known, then show cause notice can be fixed on the notice board of the officer. But under any circumstances, valid serving of show cause notice is compulsory. Now the question is, if the decision is pronounced in the open court in the presence of advocate of the assessee, will it amount to service of show cause notice? In the court, the advocate of the assessee is present, who is the authorized representative of the assessee, and in his presence, if the decision is pronounced, will it amount to service? Answer is yes. The High Court held that when decision is pronounced in the open court in the presence of the advocate of the assessee, who is authorized agent of the assessee, within the meaning of section 37C, the date of pronouncement of order would deem to be the date of service of order. If the decision was pronounced in the presence of advocate of the assessee, it is deemed served on the assessee. Nanumal Glass Works, 2012, Allahabad. Next case law is ICMC Corporation Limited, 2014. I will explain you this with a small example. Suppose this is the assessee and he has some valid Sinvat rate in his books. One fine day he thought that some Sinvat rate is to be reversed. For whatever reason, he thought that he has to reverse some Sinvat credit. So he must have passed journal entry, profit and loss account debit to Sinvat credit receivable account. Thinking under some misconception that he has some liability or he has availed some wrong Sinvat credit, by passing journal entry, he has reversed the Sinvat credit. But after few days, he realized the mistake. He realized that he was not required to reverse this Sinvat credit. Now he wants to avail that Sinvat credit back. So as to avail that Sinvat credit back, what are the options? Is he required to make application under section 11B, or because it is wrong Sinvat credit which was reversed, just by passing a journal entry, whether he can avail that Sinvat credit back? The question is, if this reversal was wrong, if this reversal was not required, then by just passing a contra journal entry, whether he can avail that Sinvat credit back, whether he can do a reverse journal entry like Sinvat credit receivable account debit, maybe to profit and loss account, and Sinvat credit is back in his book, whether he can do this, or necessarily for availing back that Sinvat credit, he will have to make application under 11B. What is the correct answer? And obvious answer, if it was wrong reversal, then by passing second journal entry, it can be availed back. Procedure of making application under 11B is not required. That is the decision. ICMC Corporation Limited, 2014, it was held, the High Court held that this process involved only an account entry reversal, and factually there is no outflow of the funds from the assessee by way of payment of duty. Thus, filing of refund claim under section 11B of Central Excise Act 1944 is not required. Further, it held that on technical adjustment made, the question of unjust enrichment as concept does not arise. In this case, it was wrong reversal. There is no question of unjust enrichment. Just by passing journal entry, the Sinvat credit can be availed back. ICMC Corporation Limited, 2014, Madras. Next case law is Superintendent Engineering TNEB 2014. The question is whether concept of unjust enrichment, whether it is equally applicable to state undertakings. First, we already know what is concept of unjust enrichment. In indirect taxes, burden of tax is ultimate. For example, for excise duty, manufacturer will always pass on burden to the end user. From one person, the burden will be passed on to the another person, and ultimately the burden of excise duty will fall only on the consumer. Suppose it is realized that some excise duty is paid excess by the manufacturer, and suppose he has made an application whether refund be given to him or whether refund should go to consumer welfare fund. And the obvious answer is because in indirect taxes burden falls on ultimate consumer, doctrine of unjust enrichment will be applicable and refund will not be given to the manufacturer and it will go to consumer welfare fund. But a question is, if applicant manufacturer, if it is state undertaking, whether still doctrine of unjust enrichment is applicable, and it is held in this case law that doctrine of unjust enrichment is not applicable if applicant manufacturer is state undertaking. The logic given here that what is state undertaking? Ultimately state means people and people means country at large. So here if money is going to the pockets of the state, it is going to the pockets of people and nobody is becoming rich at the cost of others. So doctrine of unjust enrichment not applicable. Decision Superintending Engineering TNEB 2014, doctrine of unjust enrichment not applicable if it is state undertaking. Next case law is Ticketer Industries 2012 Supreme Court, a very obvious case law. Suppose Commissioner Appeal gives a decision and that is against the department. What is the remedy available to the department? Against the Commissioner Appeals order, department can go to CSTAT. That's the remedy available. But instead of that, if department accepts the decision of Commissioner Appeal, that will amount to a fact that department has accepted the decision. Once decision is accepted for one period, for same issue, in the next month, can department go in appeal? And answer is no, because not going in appeal against Commissioner Appeals order amounts to accepting Commissioner Appeals decision. So I'll repeat the point once again. If Commissioner Appeal has given an order and it is against the department, what was the remedy available to the department? Against Commissioner Appeal order, within the time limit, department should have gone to CSTAT, but department has not done it. Not going in appeal amounts to fact that department has accepted Commissioner Appeal's decision. Now, for example, this was for the January month. For the same issue in February month, can now department issue show cause notice? Answer is no, because they have already accepted the decision, and that is what is held. Since the revenue has not questioned the correctness or otherwise of the findings on the conclusion reached by the first appellate authority, it might not be open for revenue to contend this issue further by issuing show cause notice on the same issue for future period. For first period, if you have accepted Commissioner Appeal's decision, now department will be precluded from issuing show cause notice on the same issue in the next period. That is the decision Ticketer Industries Limited 2012 Supreme Court. But one point remains. If you know there is a monetary limit given by section 80R, by 35R. 35R is a section where department does not go in appeal if there are petty amounts involved. 35R is amended in 2016, but those amended amounts are already available in my material. For example, if it is Commissioner Appeals order and amount involved is less than 5 lakh rupees, then department will not go in appeal to CSTAT. Here, department has not gone in appeal because of 35R. If the reason why department has not gone in appeal was because of 35R, that is the monetary limit, then this preclusion will not be available. That is the note you have to remember, but otherwise this is a correct decision. Ticketer Industries 2012 Supreme Court.
Next case law, RDC Concrete India
Private Limited 2011 Supreme Court. First let us try to remember 35C. If some order has been passed by CSTAT and there is a mistake apparent on the record, then and if it is brought to the notice of CSTAT, then within 6 months it can be very well rectified. That is what is written in section 35C. Basically, CSTAT will come to know about its mistake on its own violation, or assessee can bring that mistake to the notice of CSTAT, or commissioner can bring that notice to the notice of CSTAT, and if such notice is brought to the notice of CSTAT within 6 months, then certainly it can be rectified. There in that section it is already written that if rectification of mistake results into enhancing of the liability or reduction of the claim, reduction of the refund, then before doing such rectification, tribunal should give opportunity of being heard to the assessee. All of them are the provisions in 35C. But the question is, what do you mean by rectification of mistake? It is rectification of mistake only which is apparent from the records. Under this section, can tribunal revisit the argument and entirely come out with the new decision? And the answer is no. Here, the rectification is restricted to the rectification of mistakes apparent from the records. Revisiting the argument and coming out with entirely new decision is not possible under this section. That is the decision. It was held that CSTAT had reconsidered its legal view as it concluded differently by accepting the arguments which had earlier rejected. CSTAT exceeded its power under section 35C2 of the Act. In pursuance of a rectification application, it cannot reappreciate the evidence and reconsider its legal view taken earlier. That is the decision RDC Concrete India Private Limited 2011 Supreme Court. Fact Paper Mills Private Limited 2014 Supreme Court, page number 10, case law number 10. We already know first appeal is with Commissioner Appeals, second is with CSTAT, third is with High Court, and fourth is with Supreme Court. But if issue involved is regarding classification or valuation, High Court is bypassed. And appeal will lie directly to Supreme Court. Here the issue involved was, I'll read this case, can an appeal be filed before Supreme Court against order of CSTAT relating to clandestine removal, fraudulent removal of manufactured goods? And the answer is no. If issue involved is only regarding classification, valuation or excisability, then only High Court is bypassed and directly from CSTAT you can go to Supreme Court. But fraudulent removal of excisable goods, clandestine removal is not classification issue, it is not valuation issue, so appeal should lie to the High Court. That is the decision, a very simple decision, Fact Paper Mills Private Limited 2014 Supreme Court. Now here, next two decisions, we'll study them together and both of them contradict each other. The issue involved is if the appeal is filed time bar, can writ be made to the High Court and can High Court interfere and tell the Commissioner Appeal or CSTAT to condone the delay. First is the case of Khanapur Taluka Cooperative Shipping Mills Limited 2013 Mumbai. In this case law, it was held where the appeal filed against the order in origin was dismissed as time bar. The High Court in exercise of writ could neither direct the appellate authority to condone the delay nor interfere with the order passed by the adjudicating authority. Consequently, it refused to entertain the writ petition in the instant case. So, normally I can say that if appeal is rejected because of time bar, in the ordinary course of business, normally High Court will not interfere and will not insist on the appellate authority to entertain such appeal. This is true, but then also there is a contrary view taken in another case law, Excellence Overseas 2013 Gujarat. Here, the condonation delay was substantiated and the same had sufficient and acceptable grounds. The High Court said, the High Court opined that since the total length of delay was very small and the case had extremely good grounds on merit to sustain, its non-interference at that stage would result into gross injustice to the petitioner. Both of them are contradicting each other. So both of them we have to accept it as a fact-based case laws. If this kind of question comes in the examination, we have to give both the answers. We have to give reference of Khanapur Taluka Cooperative Shipping Mills Limited 2013 Mumbai, and we have to say that in the ordinary course of business, High Court will not interfere and will not insist on appellate authorities to condone the delay, but in special cases where total length of delay, if it was negligible, and not entertaining such appeals, if it will result into gross injustice to the assessee, in one of the cases, High Court may interfere, exercise their jurisdiction, and may allow appellate authorities to condone the delay. So two case laws, one is Khanapur Taluka Cooperative Shipping Mills Limited and one is Excellence Overseas 2013 Gujarat.
Not everybody will agree 100% with this case law. There may be difference of opinion. So let us accept it as it is fact-based case law for our attempt. What we have studied in Rule 21 of Central Excise Rules. Rule 21 was talking about remission of duty. Having manufactured the final product, after you have made entry into daily stock account, if before removal the final product is lost and destroyed, and if the reason was natural causes or unavoidable accident, then subject to completion of certain procedure, officer may allow remission of excise duty. So what are the conditions for remission? First condition is that final product must have been lost and destroyed. Second, it must be due to unavoidable accident or natural causes. Now let us understand facts of this case law. Here UP State Sugar Corporation Limited, they have manufactured their final product. Now that final product is volatile in nature. You have to store it properly, and for that there are storage tanks. If it is kept in storage tanks, it will not lose its quality. But assessee shown the negligence. Instead of properly storing it, part of the final product he puts in open pits, and obviously as a result lot of final product is become total waste because of the sun rays and because of the weather. The quality of that final product has deteriorated completely, and now assessee is claiming for remission under Rule 21 of Central Excise Rules. The courts rejected remission. The court said, is it because of natural causes? No. Is it because of unavoidable accidents? No. Here loss of final product is completely due to negligence of the assessee. Rule 21 does not allow this situation. That is the case law. Please read UP State Sugar Corporation Limited 2016 Allahabad.
Octo Bills India Private Limited 2015 Supreme Court. If you remember, SSI, one of the precondition, you are entitled for SSI only if you are clearing the goods under your own brand name. Moment you are clearing the goods under somebody else's brand name, SSI notification is not applicable. Let us understand the question in this case law, whether an assessee using a foreign brand name assigned to it by the brand owner with right to use the name in India exclusively is eligible for SSI exemption. Here what assessee has done, he has tied up with one foreign brand name. For India, he has purchased the right of that brand name. In India, those rights will be exclusively used by the assessee, and now he is clearing the goods under that brand name. Whether it is clearance of goods under own brand name or whether it's clearance of goods under somebody else's brand name. Please understand, if you have purchased exclusive right of use of that brand for India, certainly as if you have purchased that brand name and you are clearing the goods under your own brand name. So certainly SSI exemption notification should be allowed. That is the discussion in this case law. I will read what is held in this case law. The court said SSI exemption notification will be allowed. The Supreme Court held that because of the aforesaid assignment, because the assessee has purchased the rights for India exclusively, the court said that because of the aforesaid assignment, the assessee was using the trademark
of in its own right, and it is own trademark, and therefore it could not be said that it was using the trademark of another person. The assessee is entitled to use SSI exemption. Again I will repeat, if you have purchased the case law, purchase the brand name, if you have taken the exclusive right to use that brand name, maybe for the country specific, you literally become owner of that brand name for India, and that means clearance of goods under your own brand name, and SSI should be allowed. That is the case law, Automobiles India Private Limited, 2015 Supreme Court.
Next case law is Australian Foods India Private Limited, 2013 Supreme Court. This case law is basically about Cookie Man, but I will just change the example, and more popular example I will give you. For example, McDonald's. You are traveling in a car on a highway. At far off place you see the McDonald board, and from the board only you can make out that it is a McDonald restaurant. In fact, when you go nearby, when you have a look at the restaurant, from the look only you can make out that it is McDonald restaurant. If you enter the restaurant, inside you see the staff, from their uniform also you can make out that it is McDonald restaurant. There is a particular decorum of the shop. Any McDonald restaurant you will go, then you will find the same decorum. So from the ambience and from so many other things, you are very sure that it is McDonald restaurant, and then whatever food and drinks that is served there, you are very sure that it is McDonald burger or it's a McDonald softie. You have to understand, on the burger that they serve you, the McDonald brand name is not printed. But is it necessary that to make it clearance of goods under somebody else's brand name, even on the burger McDonald should be printed? Then only it will amount to clearance of goods under somebody else's brand name. Or just by decorum, just by feel, just by looking at the uniform, just by looking at the plates that they have served, there is a logo on those plates, the tissue papers they serve, on that there is a logo of McDonald. All because of that, whatever food is served there, is it served under the brand name of McDonald? The answer is yes. Though on the food articles or on the soft drinks or on the ice creams that are served, no McDonald is printed, still it will amount to clearance of goods under somebody else's brand name. The question is whether a manufacture and sale of specified goods not physically bearing brand name from branded sales outlet would disentitle an assessee to avail the benefit of small scale exemption. Answer is yes. If because of the feel, because of the other circumstances, if you are able to understand that those goods are branded goods, then just because on the goods the brand name is not printed, still it will amount to clearance of goods under somebody else's brand name. It was held, it is not necessary for goods to be stamped with a trade or brand name to be considered as branded goods for the purpose of SSI exemption. A scrutiny of the surrounding circumstances is not only permissible but necessary to decipher the same. The most important of these factors being the specific outlets from which the goods is sold. However, such factor would carry different use in different scenarios. There can be no single formula to determine if goods is branded or not. Such determination would vary from case to case. But the answer is very sure. When you enter McDonald restaurant, you are sure about it that the burger that is served to you is McDonald burger, though on the burger McDonald may not be printed. That is the case law, Australian Foods India Limited, 2013 Supreme Court. But here the product was not McDonald's, it was Cookie Man. So that is the case law, Australian Foods India Private Limited, 2013 Supreme Court.
Next case law, Premium Suitings Private Limited, 2016 Allahabad. SSI. What is SSI? If aggregate value of home clearances in previous year is less than or equal to 400 lakhs, then you are SSI. And if you are SSI, then in current year up to 150 lakhs you can clear without payment of excise duty. While calculating this 400 lakhs or 150 lakhs as the case may be, for one manufacturer, all his factories put together, all his products put together are to be added to arrive at this figure. So if I am a manufacturer, I have one factory in Mumbai, one factory in Pune, and from both the factories I am clearing 250 lakhs and 250 lakhs. Then for next year whether I am SSI, and the answer is no, because to find out this 400 lakh rupees for one manufacturer, all his factories put together, all his products put together, clubbing has to be done. And then we can find out whether it is less than or equal to 400 lakh rupees. And if it is less than or equal to 400 lakh rupees, then only he becomes SSI. Acha, what about clubbing? When the provisions of clubbing of several factories turnover will take place? My answer, we have studied in one of the case laws in our classroom condition. The answer goes like this. Ultimately, we have to check whether the real control, real management, real capital contribution, is it by one person or group of persons, or ultimately are the profits getting plowed back to one person or group of persons? If answer is yes, then all those units will understand as dummy units and clubbing has to be done. So the answer is very simple. If control, management, capital, decision making, profits are going to one person or group of persons, then clubbing of all factories turnover has to be done to arrive at to find out SSI limit. Here it is very simple case law. In fact, in the question only the answer is written. Should the clearances of two divisions of the SSE having separate central excise registration be clubbed for determining the turnover for claiming SSI exemption? Just because there is a separate excise registration of two factories, whether you can save yourself from clubbing provisions, and the answer obviously is no. Please read, it is very self-explanatory case law, and just now in my discussion I already explained you the possible answer. Premium Suitings Private Limited, 2016, Allahabad.
Next case law is Exxon 2013, Jharkhand. I will explain this case law with the help of an example. For example, RIL, Reliance Industries Limited. They are doing, for example, Reliance is a very big corporate and they are very clean corporate, but because it is famous name I am using this example. Suppose Reliance previous year turnover is 300 lakhs. But they have also floated one company, A Limited. Actually, A Limited is just a dummy company. Because Reliance wants to take advantage of SSI notification, what they have done, the next turnover they have done from A Limited, from where they have done turnover of another 200 lakhs. Please understand, A Limited was actually a dummy company. It was created only because Reliance wants to continue to enjoy SSI exemption notification. But department was very smart, department was very clever. They identified that A Limited is dummy company, and while calculating Reliance turnover for the purpose of SSI notification, they have added 200 lakh rupees. They have clubbed 200 lakh rupees, the turnover of A Limited into Reliance turnover. They said Reliance turnover is 500 lakh rupees. In other words, department has recognized that A Limited is a dummy company and this turnover of 200 lakh rupees was actually done only by Reliance. If this is true, and now penalty is to be levied, whether penalty should be levied on Reliance or it should be levied on A Limited. When department itself is saying that A Limited is dummy company, it actually does not exist and this turnover is actually the turnover done by Reliance. If at all some penalty is to be put, it is to be put on Reliance and not on A Limited. That is the case law. It was held when it has been established that dubious company, the dummy company, did not undertake any transactions. Penalty could not be levied on the same for the transactions undertaken by the original company. Here we have said that A Limited is a dummy company. It has not done any transaction. Those turnover was actually done by Reliance. Then penalty should be levied on Reliance. The High Court emphasized that penalty could not be imposed on the company who did not undertake any transaction. That is the case law, Exxon 2013, Jharkhand. Next case law is Alex Knighting Machinery Company 2010. Again, this I will explain you with the help of one example. There are two partners, A and B, and they own a brand name. There is a partnership firm, A and B, they own this brand name. Whenever they manufacture the goods and clear the goods, they always clear it under their own brand name. In that sense, Mr. B is co-owner of this brand name. Mr. B has also his one independent unit, and from there also he is clearing the goods under the same brand name. I'll repeat. A and B is a partnership firm. They own this brand name. Whenever they clear the goods, they clear the goods under this brand name. By this logic, Mr. B is co-owner of this brand name. Mr. B has one independent unit also. Other than the factory of the partnership firm, he has one independent unit also. From there also, he is clearing the goods under the same brand name. Whether this will amount to clearance of goods under own brand name, or this will amount to clearance of goods under somebody else's brand name. And the answer is, if Mr. B is co-owner of this brand name, then this certainly amounts to clearance of goods under his own brand name. That is the decision. It was held, the tribunal held, that since the assessee was a partner in the firm of whose brand name it was using, he was the co-owner of such brand name. Hence, he could not be said to have used the brand name of another person. Thus, assessee was eligible for SSI exemption in given case. That is the case law, Alex Knighting Machinery Company 2010. Next case law is very simple case law. In the question only answer is there. I won't be able to do much value addition. The question is whether the clearance of two firms with common brand name, common management, accounts, and goods being manufactured in the same factory premises, can it be clubbed for the purpose of SSI exemption? Obvious answer is yes. They are dummy units or they are under the same management. Devra Engineering Works 2010. We have already read this in the classroom that whether the units are dummy and whether clubbing of clearances should take place. For deciding that, what are the decisive factors? Whether the management is same, whether decision making is done by a person or group of person, whether capital contribution is by one person or group of person, whether profits are ultimately plowed back by one person or group of person, then all the units are dummy units or they are joint units, they are the units of the same manufacturer, and clubbing should take place. Here, the clearance of two firms under the common brand name, common management, obviously clubbing provisions have to take place. Devra Engineering Works 2010.
Honda CL Power Products Limited 2015 Supreme Court. The question here, can the benefit of exemption notification be granted to the assessee where one of the conditions to avail exemption is not strictly followed? Assessee has not fulfilled all the conditions which is must for availing exemption. Whether still exemption can be granted? Obviously answer is no. Also in the classroom condition we have always studied this, that exemption notifications are to be interpreted literally, and any doubt if it is there, advantage is to be given to the department. So here this particular case, exemption was granted subject to condition that assessee is paying excise duty either fully in cash or by using PLA, personal ledger account. Assessee availed exemption but paid excise duty using SINVAT credit. That means he has not met one of the conditions of exemption. Now whether exemption can be granted, and answer is no. I will repeat. Here in this particular exemption was available subject to condition that excise duty liability is paid using cash or personal ledger account. Then only exemption is available. Assessee availed exemption but whatever liability was there, net of exemption, he paid it using SINVAT credit. Now whether still exemption will be granted. Held not entitled, the apex court observed that assessee was required to fulfill the condition in strict sense, viz. To pay duty either in cash or through PLA, if it wanted to avail the benefit of exemption, and not through adjustment of SINVAT credit. The exemption notifications are to be construed strictly, and even if there is any doubt, same is to be given in the favor of department. The Supreme Court held that once it is found that condition has not been fulfilled, the obvious consequence would be that assessee was not entitled to the benefit of the said notification. Exemption notifications are to be literally interpreted and they have to be followed literally. If conditions of the exemptions are not satisfied, certainly exemption will not be available to the assessee. Please read Honda CL Power Products Limited 2015 Supreme Court.
Next case law, SS Power Switch Gears Limited 2013 Madras. I will explain you this case law with the help of an example so that it becomes easy to understand. For example, there is a confusion whether football is sports goods or leather goods. For example, if it is sports goods, 10% duty. If it is leather goods, 20% duty. Suppose this is the dispute. Football is sports goods or leather goods. Under section 37B, CBC has issued order instruction direction. You know, order instruction direction cannot be issued to do particular assessment in particular way. So this was a general order instruction direction. But this order instruction direction was issued on 1st January 2017. Having read order instruction direction, now for example, the issue is settled and now we know that football is sports goods. I'll repeat the point once again. Order instruction direction was issued on 1st January 2017 and now classification issue from 1st January 2017 is settled. Football is certainly sports goods. Still, can department issue show cause notice for earlier period earlier to 1st January, claiming that football is leather goods and ask differential duty? The question is whether order instruction direction which settles the issue of classification, whether it is to be taken prospectively or retrospectively. And the answer, it is to be taken retrospectively. If order instruction direction says that football is sports goods, it was always so. It is not to be taken prospectively, it has to be taken retrospectively. The question is whether a circular issued under section 37B of Central Excise Act 1944 clarifies a classification issue, can demand alleging misclassification be raised under section 11A of the Act for the period prior to the date of said circular. Will 37B classification be taken prospectively or retrospectively? And it was held that once reclassification notification circular is issued, the revenue cannot invoke section 11A of the Act to make demand for the period prior to date of such classification notification or circular. That is the decision SS Power Switch Gears Limited 2013 Madras. The last case law is Vadilal Gas Limited 2010 Gujarat. Before we read this case law, let us try to remember something. Second application to settlement commission cannot be made under certain circumstances, which is given by section 32O. Here in the classroom condition we have already studied this section, but एक बार उसको revise करते हैं. Section 32O, bar on subsequent application for settlement in certain cases. Second time you cannot go to settlement commission in certain cases. What are those situations is given by 32O. First, an order of settlement provides for imposition of penalty on the person who made application under section 32E for settlement on the grounds of concealments of particular of his duty liability. When application for settlement commission was made, it was found that assessee has concealed some material facts and penalty was levied on him, then he cannot go to the settlement commission second time. That was the first situation. Second, after the passing of an order in relation to a case, such person is convicted of an offence under this act in relation to that case. First order of settlement commission was passed. Assessee never cooperated, never fulfilled the terms of settlement, and as a result he was convicted. Then again second time he cannot go to the settlement commission. Third, the cases of such person is sent back to Central Excise Officer having jurisdiction by the settlement commission under section 32L. Actually assessee made the application, settlement procedure started, but while the procedure was on, settlement commission was of the opinion that assessee is not cooperating. He has kept in hiding certain material facts and he is not cooperating with settlement commission the way he should cooperate, and because of that settlement commission has sent his application back to the adjudicating officers. These are the situations. If the assessee has done one of these three things, then he is debarred from making second application for settlement commission. That is 32O. But now here what has happened is like this. You know, one of the part of the procedure before making settlement application is whatever duty, additional duty which the assessee has declared, he has paid that duty with interest. That is one of the precondition before your application is received by settlement commission. Here assessee has not complied with that, and that is why settlement commission rejected his application. I will repeat, you are supposed to pay, you are supposed to declare additional duty. First you are supposed to pay it with interest and then you are supposed to make application for settlement. Here assessee made application without paying duty and interest. So settlement commission rejected it. So assessee now paid the duty, paid the interest and again made the application for settlement. Whether this application should be maintainable or whether it should get rejected because of 32O. This situation is only a procedural lapse and assessee should be given opportunity and his application should be maintainable. That is the decision. Since the earlier application was dismissed on technical defect for non-compliance of provisions of clause B of the proviso to section 32E1 of the Act and same was not considered and decided on merits, the second application filed after depositing the additional excise duty and interest would be maintainable. If first application was considered on the merits of the case and based on that if it was rejected, second application may not be maintainable. But if first application was rejected only based on some procedural lapse, then second application should be maintainable. That is the case law, Vadilal Gases Limited, Gujarat High Court.